Uh-oh. There we go. Okay, it should be working now. I forgot I had the wrong mic plugged in. And is it still on the wrong mic? No, it should be good now. Okay, let me know if you guys can hear me. I have used the wrong mic and I apologize. All right, there we go. Yo, what up, Looney? What up, Cruz? Good to see you guys. What up, Sermon? Hey, let me go over my Weeble portfolio again. Yo, sorry for everyone on the YouTube replay. But yeah, here is our Weeble portfolio. We're up 22% all time in here, and on the day we're up 1%. And yeah, in this portfolio we have a lot of risky names. Like Dave is doing surprisingly very well. They're up 6% on the day. What's down on the day? Call Main. Ooh, actually, I just bought a bunch of Call Main. It's my newest position actually in my Roth IRA. So I own some Call Main in my Weeble portfolio, and for the first time ever, guys, I actually decided to buy 5 shares of Call Main in my Roth IRA. It's that good of a stock. I'm thinking about picking up another share of it as well. But yeah, here's our Robinhood Roth IRA. We're up to 11% year to date. We're pretty much we're up 12% all time. We started this portfolio pretty much a year ago, right at the beginning of the year. And also, we have our Robinhood portfolio. This is known as our dividend-only account, where every stock in here pays a dividend. Hey, what up, Jade? Yeah, we'll look at Amazon after this. Yeah, I do love Amazon. I am a shareholder. Yeah, what up, Cruz? What up, Looney? Thank y'all. So yeah, here's my total percent change on every stock in here. Luckily, we're green on every single holding in here. Let me see how the market's doing. So not too bad considering we're pretty much at an all-time high yesterday. We're continuing to see more green. That's insane. So yeah, that's our our Robinhood and our Weeble portfolio. And then we also finally have our Moomoo account, which is our buy and never sell account. Where once I buy a stock in here, I really try and just never sell it. Powell Industries is crushing it. It's now over a $4,000 position for me, and I literally put like $890 into this stock. So that's what's crazy. We're up 4.5x, which is pretty cool. Also, Coca-Cola Consolidated, they're on like the largest winning streak in like a very long time, I heard. Longest winning streak since November 2023. This is Coca-Cola Consolidated, the bottling company, and that's one I've kind of been dollar cost averaging into, so it's great to see that. And someone has been saying Amazon stock in the chat. Yeah, I actually just bought another share of Amazon. Hey, I guess that looks like it was goodly timed because they're up 3% on the day. I've been saying if you have the intention like me to never sell Amazon, it's worth buying right here because this is literally an ETF in one. Let's see if there's any news down here. Oh, yeah, did anyone hear about the AWS global outage? A bunch of airlines had delays, a bunch of stuff. AWS and IBM strengthen cloud and AI partnership. Well, they might need that. So anyway, let me share with you their numbers because a lot of people know Amazon as like a store, like their online stores, but that's only 40% of the revenue. Then they have their third-party seller services, but actually the most valuable part of Amazon is their web services. Remember that huge outage that it was actually kind of good publicity. We saw how many companies actually rely on AWS, and it's literally over $100 billion of annual revenue for them. It's their highest net margin business. They're also a subscription play because Amazon Prime, Twitch Prime, an advertising play. They own some physical stores. This is literally a grocery store. It's like a Walmart, a UPS, an Instacart, an Oracle Cloud, all in one. They're a robotics play, a satellite play, subscription play, book play, e-commerce play. I mean, you can't get any better than this. And look at the profits they're making. AI play. I mean, they're so innovative. If you go to their cash from investing activities, the best part about Amazon is the fact that they don't pay a dividend and don't do share buybacks and just deploy all the money they make back into the company, either buying new businesses. You don't want Amazon as competition. They literally make 15 to 20 billion of net income a quarter, and look at the growth rates year over year. This growth rate, what's the net income going to be the same time next year? They're expanding margins. So everything financially is headed in the right direction for Amazon. And that's why I decided to buy another share around this $213 price. And even if like you would want to buy a share at 223, it's worth it. Like as long as you never sell, like it's worth it to buy another share of Amazon, even after its little 3% rally of a day. But yeah, I love that. Hey, what up, New York? Could we look at VITL? I'd buy MELI instead of Amazon, more growthy. That's like a international Amazon. It's they're just honestly, I would still rather have Amazon, but yeah, this one could be an easier double than an Amazon because this is only worth $107 billion. Yeah, so if you're wondering what is Mercado Libre or whatever they're pronounced, it's basically just like Asia's, or is it Mexican? Yeah, or South American Amazon. Notice the US isn't on here. They don't have any money from the US. It's all Brazil, Mexico, Argentina. So this isn't a US play, but they still make good money. They're up 33%. The net income did fall year over year slightly, but no big deal. Yeah, they're also another interesting. They're a more e-commerce play because Amazon's more of a cloud play. Amazon has the cloud businesses. Okay. Hey, what up? What app is this? What up, Daily? By the way, this is a brokerage where you buy stocks on. Yeah, if you want to get it, it's in the link tree in my bio, the first link there. Hey, what up, Sermon? I appreciate you. What is PE? Yeah, the PE ratio is just the price to net income plus any share buybacks or dilution. So can we look at MP Materials? Heck yeah, Cruz, let's do it. So MP Materials fell right at the psychological $100 a share level. This is one of the rare earth mineral plays. And let's see, US, Australia signed 8.5 billion contract. That's interesting. But yeah, basically the reason the stock is gapped up so much from this day right here is because the literal US government decided to take a 10% stake in this company because we need to be more rare earth mineral independent. China's getting more stingy with how they China implements comprehensive rare earth export control. So they're making it harder for us to actually get the rare earth minerals. So we're trying to be more rare earth mineral independent by opening up more US and Canadian mines and stuff like that. And MP Material, they have this one mine that they're opening up with the US that's going to supply the certain rare earth minerals for the US for the next 50 years just from this one mine. So it's pretty cool. Basically, the US cannot allow them to go bankrupt. CRMD went up by 20% yesterday. Absolutely. Hey, Catherine, good to see you. Hope you're having a great day. So yeah, check this out. Here in our Roth IRA, this isn't a stock I normally recommend. But yeah, they're up 6% on the week. So 2% on the month. But yeah, yesterday they basically pre-released their earnings, the results. And so we're still down on our position. But let me tell you why I love this stock and why I own them. And again, as much as I love this company, they're only a $500 position for me. And I normally don't like these kind of stocks, but here's what I love about them. If you look in the top right, the market cap, this whole entire company is worth $900 million. So the whole company's worth $900 million. They literally just gave guidance for next quarter. Oh, I don't know how. Chromatic surge on boosted full year outlook. Basically, remember, the whole company is worth $900 million. They're going to have revenue of 325. It's hard to go. Basically, I'll just go down here. So here's the expectations. Whoa, this just got revised way higher. That's insane. If anyone remembers looking at this before, the revenue is now expected to be $140 million in 2 quarters. The EPS is literally going to be more than double. The net income is going to go from 28 cents to 78 cents. Same with the EBITDA. So everything I love about this company, the fact that they literally have $190 million of cash and no debt. Like that takes a lot of risk off the table. It's such a safety net. $190 million of cash and no debt. And the whole company's worth $900 million. So it's a $900 million company that the net income is going to double. What is the net income? The net income was $19 million. So they're going to be doing $40 million of net income a quarter, which is almost $200 million of net income a year, plus the $190 million of cash and no debt. That's why I put $500 in this company. Again, they're only worth 900 mil. I like the risk to reward on that one. So again, as much as I love them, wouldn't have it as a huge position. Okay, so, oh yeah, I forgot to get to that one. VITL, let's do it here. So Vital Farms, let's check it out. They're the same price as they IPO'd in 2020. Beyond Meat diluted. Yeah, hey, we'll look at Beyond Meat after this too. So yeah, Vital Farms right here. I don't know what this company does actually. Let's see. Eggs and related products. So hey, it's another egg play, kind of like Calmaine. Butter and butter-related products. So I know the chicken egg industry has been super growthy this past year, just seen from Calmaine. The revenue's up 25. What are their margins? Way lower than Calmaine's, but actually that's normal for a commodity. 5 to 10% net margin. That's still good, although the margin did fall year over year. Really good balance sheet as well. 108 mil of cash and looks like no debt. Have they been doing share buybacks? Let me check this out. So they have not been doing any share buybacks and they don't pay a dividend either. Well, anyway, honestly, I would rather go with the Calmaine, and I'm totally biased, but I just bought 5 shares of this one yesterday. But yeah, wow, they've done amazing. But yeah, we now own in just this portfolio 5 shares of Calmaine. It's another chicken egg stock. So there was Vital Farms as a chicken egg play. Here's another one that's also on a dip that I just bought that also does the exact same thing. Conventional shell egg sales, specialty shell egg sales. So they basically just sell, of course, eggs and they print money. I mean, what are their margins? Yeah, 20 to 35% net margins, a whole different ballpark than another company. And this one also has no debt at all. 25% of the market cap is just their cash on hand. Or actually, wait, I don't think it's that much. But anyway, that's my chicken egg stock. So what up, Lopez? He says thoughts on Google. Any good buys for today? Well, I don't know about great buys, but yeah, I did. Well, this was yesterday. I bought 5 shares of Calm in my Roth IRA. Yeah, here's my portfolio today. Our Robinhood, our main account is down on the day. Mainly from Constellation Energy. But here's Google right here, another stock I own. Wow, they're down 3% on the day. Google Cloud partners with InterSystems for healthcare AI. Yeah, the Google Cloud is huge. I love that one. So let's just go look at their numbers right here. This is a stock that's like a must own in my opinion. I mean, they own YouTube, Android, Waymo. They're in quantum chips, TPUs, advertising. They own Android. I mean, the list goes on, and they're only trading at 26 times PE net income. I mean, that's a pretty fair multiple for a Mag 7. And yeah, here's just the Google Cloud play. Oh, and they just acquired Wiz for $30 billion. Gets them as top 10 cybersecurity plays out there. Like, look at the Google Cloud business. I mean, this is insane. Revenue's up 32, after grew 30, and that's just a cloud business. And look at this after-tax net income. It's insane. 25 to 35 bill in net income a quarter, and this growth rate is insane. So what is Google doing with 25 bill in net income a quarter? Well, since they are too big to really acquire a company, right now they just started paying a dividend. So the dividend only costs 2.5 billion. Again, this quarter they made 30 billion. I mean, that pays for the whole year of dividends. I mean, plus a lot more. They have so much room to raise their dividend. So this should be a nice dividend growth company. And since they have so much leftover money, they're doing insane share buybacks. Literally 13 to 15 billion dollars a quarter they're spending on buying back their own stock. Again, here's what that is for you as a shareholder. We see the net income. The net income's up by 19, but the net income per share is up by 22.2 because the share part of the ratio went down. Pretty cool. So yeah, Google, they're a great one. It's because OpenAI is going to release a new browser. Oh, that is interesting. U1 said, can you do APLD, please? Yeah, let's do it. You know, that's actually a company that NVIDIA owns. Oh, and then we'll look at Beyond Meat again. Beyond Meat's just some meme momentum junk, but we will look at that one. But yeah, here's APLD right here. This is a company owned by NVIDIA. And again, just because NVIDIA owns a stock doesn't mean you should. You should always go do your own research on it. And here's what I like about APLD. Again, one of the reasons they just gapped up on this day is because that was earnings day, and they had great earnings. Look at this orange line. The orange line is what the analysts expected. They expected 45 mil, and they reported 64 million. I mean, it was an insane beat, and not just a beat on the revenue, but also on the net income losses. They were expected to lose 13 cents of EPS, and they only lost 7. So yeah, it was a great quarter. This is your data center hosting businesses, or it just really beat on what the analysts thought. So that's the reason it gaps up so much on earnings day. I probably wouldn't touch it here. It probably seems a bit expensive here, but congrats if you own that one. New data center too. Oh, hey, nice, Freedom. Let me look at Beyond Meat, and then we'll get to the Honest Company. Hey, Henrik, what up, dude? Hope you're having a great day. So yeah, here's Beyond Meat. They're up 95% of the day, but don't feel like you missed out on anything, because this company inevitably will probably be bankrupt again. Or what is the news today? Let's see. Beyond Meat. I don't know. But anyway, if we look at this market cap right here, the whole company of Beyond Meat is worth $1.1 billion. So remember that number right there. Just remember that in the back of your head. The whole company is worth $1.1 billion. And look at this. In the past year, they've lost well over 100 million, or 150 million of net income. So they're losing 150 million of net income a year, which is 15% of the market cap. They also have a ton of debt to pay. Like, the assets are half the liabilities. So they have a lot of debt to pay. You can't really pay off debt with losing net income every quarter. They're really and look at the sales as well. Not only are they losing a bunch of money, but the business just isn't growing. The lifeblood of the company, the sales, the revenue's down 19 after it fell 9, after it fell 30, after it fell 2. I mean, they're on a streak of declining sales. So I can totally get why this one was at an all-time low before today. And the only reason I would touch this one is to catch some sort of momentum. Maybe you could juice some percent out of all the momentum and hype today. But yeah, wouldn't trust that with any significant money. Okay, do you only do stocks? Yeah, stocks, ETFs, pretty much. We don't really look at crypto. Walmart contract. Oh, cool. I remember seeing some Beyond Meat stuff in Kroger. So JB said Comcast. Oh, there was another stock I want to look at. I forgot what it was. Oh, well. Or it was the Honest Company, I think. Remember to look at the Honest Company, but I don't have any good thoughts to say about them. What app do you use to trade? Oh, yeah. Hey, by the way, if you want to get this brokerage I'm on, it's where you buy stocks. It's in the link tree in my bio, very first link there. Full disclosure, it is an affiliate link. So if you go and deposit $100, we'll both get some free stocks, which is pretty cool. But all these brokerages, by the way, are all linked in the link tree in my bio. All these are where you buy stocks on all three of these brokerages. But yeah, this one's my favorite one. Lowest fee, free brokerage, link tree in bio, first link. Okay, so Comcast right here. This is an interesting story that sadly, I think this one's just not going to outperform the market in the long run because of their residential connectivity cable business. It literally just declined single digits like that. And that's 60% of the revenue, residential connectivity. And as you can see, it just slowly declines every year just because of the nature. So we kind of want to see them invest more into their other businesses. And that's kind of what they've been doing. They just expanded their Universal Studios theme park. Did anyone see like the Nintendo World thing at Florida, I think? But yeah, they have the media business. Yeah, they own a media studio where it's like they own Despicable Me, whatever. Like, is that DreamWorks? I don't know. But anyway, yeah, they're just not too growthy. If we could look at the sales, the sales are up 2, down 0.5, up 2. Like, it's just low single digit revenue. So it's just not too growthy of a company. But the good news is, actually, this was a one-time adjustment. They did not make $11 billion this quarter. They made around their normal amount. It actually fell 10% year over year, their profits. But anyway, they're making $3 to $4 billion in net income a quarter. What's cool is you're basically buying this for the dividend because the dividend is super, super safe. Hey, watch out for the guy in chat. Hold on, I got to report that guy to TikTok. Okay. So yeah, if we go to Comcast right here, yeah, watch out for people impersonating me in the chat, by the way. By the way, I sell nothing. I have no course book, WhatsApp. I'll never follow you. I'll never DM you, nothing like that. But yeah, look, the dividend only costs $1.24 billion. And, they're making $3 to $4.5 billion a quarter. So pretty cool. But I just don't expect that to outperform the market in the long run. Okay, so yeah, going back to the Honest Company right here. You won. We looked at APLD right as you said it the first time, so we won't look at that one again for a little bit. But yeah, if we look at by the way, if you missed anything, I'm also streaming on YouTube. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. You can just type in YouTube Nathan Robert. But yeah, if you look, and you can rewind it because you can't do that on TikTok. But if you look in the top right, the market cap, this is a super small company. They're worth $400 million, and I think I know why this stock is like not done too good. It's just because this isn't too growthy of a company. I mean, they just sell a commodity. 60% of their sales are diapers and wipes. And if we go to the revenue, the lifeblood of the company, the sales, it was only up 0.44% year over year. So that doesn't beat inflation, unfortunately. But the good news, they did make net income these past 2 quarters. So they're pretty much just now getting net income positive. But I think investors are a little disappointed with the slow growth of the revenue. Yeah, I don't know, $400 million company, sell diapers and wipes, and what app should I use to buy stocks? Hey, Ethan, I would get this one. Go to the link tree in my bio, the very first link there. All these you can buy stocks on any app here. So all 3 of these are good. But this one is the lowest fee, freest brokerage. If you want to get it, link tree in bio, first link there. And if you deposit $100, we'll both get like some free stocks. All right. So can you? Oh, hey, what up, Pierce? We'll do Oscar. Yeah, let's do Oscar right here. 90% of the day is crazy. What up, Sermon? Hey, can you analyze Kraken? Yeah, we'll look at them. I don't love that one. Having an amazing day after 20% CRMD and Coca-Cola 5%. Hey, that's awesome, Henrik. Yeah, dude, CRMD went crazy yesterday. I own some of them too. But yeah, here's Oscar Health. They're up 6% of the day. A lot of the healthcare names, I think like Humana or whatever that company's called, went up a bunch today. Thinking of buying AMD. We'll look at AMD, Amez, what's up? And Joby, we'll get to these. So here's Oscar Health. This one I love specifically for the amount of growth that they have. This is just like a pure growth company. If we go to their annual revenue, check this out. I mean, the revenue went from $580 million for the full year 2020 to legit $9.2 billion for the full year 2024. And just on the most recent quarter, the revenue's up 29, after grew 45, after grew 45, after grew 177. So they're on a streak of growth, but they're just now getting net income positive. The numbers still do look a little choppy here, like they lost money this quarter, but made money last quarter. So they're still trying to get more consistently profitable, but I like them, but just, they're really growthy. All right, so Kraken, PNG.Canada. So yeah, look at wow. First off, congrats if you own this company. It is literally at an all-time high today. This brokerage wouldn't even let me buy this one just because they're Canadian or something. I don't know. And I can normally buy most Canadian stocks, but let's see, are they growing? Well, look at the analyst expectations. The revenue is going to go from 19 mil to 32 million. So there's some good, this revenue is basically supposed to double. Oh, they're supposed to get net income positive, stay net income positive, make EBITDA. So maybe it's those expectations. And let me check out what the market cap is. So they're a $2 billion company that's potentially going to be doing like, if we do a 1 to 2 year on multiple, like 50 mil a quarter. I wouldn't buy it here today, but that's interesting. I can see why they're going up so much. And plus the momentum around all the robotics names, like Rich Tech Robotics is crazy. But Beast said, what app is this? Yeah, hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, very first link there. By the way, this is a software, a brokerage where you buy stocks on, so they ask you for a bunch of information. Okay, SoundHound, what up? Let's do SoundHound AI. Oh, and Nebius, remind me to look at Nebius. Hey, Jacob, I appreciate you, man. You too. So if you're a shareholder of SoundHound AI, there's one metric you want to look at. And the one metric you look at, because this is what controls the stock. You ready? It's their subscription revenue. This has been the growth driver behind the whole stock. Because if we go to a year ago, this was a whole nothing burger, 400,000 of revenue a quarter. But now, 32 million, up from 19 million, up from like, the revenue is so growthy. At this growth rate, what's it going to be this same time next year? And they're beating on analyst expectations. Like, check that out. Analysts expected 32 million. Well, they reported 42 million. So it was a great growthy number. They did miss on their royalty numbers, though, like their product royalties. Actually, they grew 8%, but that was after falling. But anyway, they're interesting. They're still losing a bunch of money, but as long as they can keep up that growth rate, they're definitely interesting. So let's see here. AMD, what up, Amez? So AMD stock is one that I do own. Full disclosure, if we go over here to our Webull account, which we're up on the day. Yeah, we got 11 shares of AMD stock. So they're pretty, that's an all-time high pretty much on AMD. So congrats if you own this one. I picked AMD over NVIDIA because I think it's an easier double. Because NVIDIA is worth like 4.5 trillion. For you to double your money, they have to go to 9 trillion. Well, AMD is only worth 380 billion, an easier double. But yeah, I wouldn't buy this one here. I think it's a little too late to buy the stock now. But yeah, they're guided. If you're wondering why did the stock gap up so much of this day, it's actually because OpenAI is now going to use AMD chips, and that's a great marketing tool for AMD. Like the #1 AI company in the world is using AMD chips. They're good enough. They're just as good as NVIDIA's. Buy our chips. They're cheaper for the same results. So yeah, the growth expectations are good, and they're constantly beating on their revenue numbers. We can see the net income. They're making good net income every quarter. Also the FCF, which stands for free cash flow. It's up to 1.7 billion, up 3x year over year, and they have a great balance sheet as well. No net debt either. So I just like AMD for their numbers, and it's my semiconductor exposure play. Yeah, they're getting into data centers. Data centers need GPUs, and AMD makes their own GPUs, so they can just supply them themselves. Pretty cool. Any advice for what I put $50 to $100 in today? I think a lot of stuff is tough to buy today because the market is really green. And a bit overvalued. But just buy the S&P 500. Buy companies if you have the intention to never sell it. Buy companies use and love, like an Amazon, Google, Meta, Microsoft, Apple. Whatever. I own McDonald's, Google, Meta, United Rentals, Constellation Energy. I also have a Roth IRA as well. But yeah. Just rewinded your YouTube stream. My internet cut out. Thanks for looking at. Hey, yeah, no problem. You won. I appreciate you, man. So let's see here. Drew said, I knew find is Fiserv. Could you look at that one? What's the yeah, if you got a stock you want to look at, give me the ticker symbol. You know what? I'll type it in for you because I appreciate you. Oh, ticker symbol FI. Okay, let's do it here. Ooh, and then we'll look at hey, what up, Jed? And what up, Sal? Yeah, we'll look at Total Energies. Can you look at Clean Spark? Okay, hey, Sal, what's the ticker symbol for Total Energies? Okay, so here's Fiserv right here. Yikes. They had a nasty gap down on earnings and a gap down over there. Let's go see what happened. Is there any weekly news? Nope. Okay, let's go. Numbers. So they missed on revenue, but just slightly. They missed on net income, but just slightly. And they missed on, it was barely a slight miss. They're a financial company. The financial revenue's up 7.2. The merchant revenue's up 9. And I wonder why the stock is falling so bad. The net income's supposed to almost double year over year. Revenue's growing. Yeah, I mean, fundamentally, there must be something I don't know here. Is there like some short thesis? What's the short interest? No, there's no short interest basically. So these numbers look good. I mean, 500 mil to $1 billion of net income a quarter. What's the market cap? They're trading at 21 times net income. I mean, it looks cheap. I wonder what the reason is. Because the future growth expectations look pretty decent. So Looney said P&R earnings came out today. Yeah, let me see. So Let's see if we can find their numbers. I think these, was it 2025 Q2 is what they just reported? I don't know. Oh, this is that pool company, Pool Flow Water Solutions. They met on revenue. Looks like they missed on net income, but was that this quarter? I don't know. But they're barely down. It looks like a flat day. Oh, they were initially down to 104, but now they're up 5%. Well, hey, nice little recovery on them. All right. So, um, let's check out some undervalued sectors. Yo, Pill said, or Jed said CleanSpark. Here's the thing with CleanSpark. This is just a Bitcoin mining company. And I've never seen a Bitcoin mining company like actually consistently outperform Bitcoin. I've looked at all them out there. I've looked at CleanSpark, Marathon, Hive, Hut 8, Corzi. Like, try and find one that's actually outperformed Bitcoin. So I know some of these are like, it has outperformed in the short term because they're getting away from actually Bitcoin mining, and analysts see that as a good, because if you go to the revenue right now, 100% of this company's revenue comes from their Bitcoin mining. It's just a Bitcoin miner. But I would just rather own Bitcoin, to be honest with you. Okay, who cares? The only thing that matters is technical analysis. That I don't agree with. It's always fundamentals that outshine in the long run. But technical analysis is interesting. Some people are good at that. All right. So Eric said OUST. Oh, I love this stock right here. Ouster. Yo, so check this one out right here. This has a lot of growth coming in the future. So I can see why this stock has done so well. Hey, Hill Dorset, dude, I appreciate that gift there. I appreciate that. But yeah, check this out. They're in the sale and production of LiDAR sensor kits. Like Google's Waymo cars use LiDAR, and the revenue's up 29 after it grew 123. So they're on a streak of growth, and the growth is expected to continue. 35 mil this quarter. They're expected to be 40 million, and they always beat by a good chunk every quarter. So they're probably going to beat on that 40 million number. So there's just a lot of future growth expected in the future. They're narrowing their losses. So it's a nice LiDAR sensor play, but do be aware that they're still a really small company, $1.8 billion market cap, but they're interesting. That's your LiDAR play. Let's see. Bought some Ouster today. Hey, nice, dude. Can you check out Dell and U-Haul? Let's do Dell stock. They're kind of getting into what Super Microcomputer is doing, like the server installations. Let's see here. DELL. Oh, hey, remind me to look at Serve Robotics. That sounds interesting. I know Serve Robotics has a big partnership with DoorDash. But yeah, here's Dell Technologies. They're like a value play. Like, even if you buy the stock right now, they're really only trading at 22 times PE, which means you're trading at 22 times net income. That's pretty fair. And if we go to their infrastructure solutions group, like, this isn't the slow grower it used to be. Like, the growth is packed. The revenue grew 44% to a new record, up 62% from the previous quarter. So they just had this absolute blowout of a quarter. The net income also looks good. Like, check out this. The sales are up by 18. So the revenue is up by 18, but the net income is up by 32. So that means they grew their margin a bit, which is cool. Still low margin business, single digit. But that's kind of just, they actually have a slight better margin than Super Microcomputer does. But, interesting. And you get a nice yield, a 1.3% dividend yield with Dell. I don't know if they'll outperform the market in the long run, but looks like the growth is back, and I like that. What up, AZO? Good to see you. So UHAL. Yeah, Ouster is a bit volatile. Yeah, super volatile. I wouldn't have a meaningful amount of money in that company. So then we'll look at TTE after this. And, oh yeah, Joby, my bad, Cat 3. And we'll get to Joby. I don't have anything good to say about Joby, sadly, just because they're still revenueless, but we will cover them. What up? SoFi. What up, Jake? Remind me to look at SoFi stock. So here's U-Haul. They're an $11 billion company. Let's go check out their numbers right here. So moving in self-storage, that's what I love about them. They're getting into self-storage, and I've seen a lot of their self-storage. Dude, this guy, I kid you not, this guy on my street has like 5 U-Haul like rental things in his yard right now. So hey, he must be supplying the stock. It looks like the net income margins have been on a nasty decline. Like in 2022, they made a couple $100 million a quarter. Now it's just like red. But they're still making consistent money. You get no dividend on this company. I think there's like U-Haul A and like U-Haul B. There's like 2 different shares, I believe. But honestly, I like U-Haul. But I know they are super interest rate sensitive. Like when everyone was moving in 2021, U-Haul was going crazy, and same with self-storage. Yeah, moving in storage. Yeah, they look the same. Anyway, that's interesting. I've actually owned U-Haul before. They used to pay like a monthly dividend or like a special dividend. So here's Total Energies. Let's see, they're $132 billion market cap. So that is an absolute big market cap, but yikes. The stock, do beware, is the same price that it was in 2005. So you bought the stock in 2005 at $60. Well, it's $60 today. Unfortunately, they must have a high yield. Yeah, so you're basically buying this just for the dividend. You get a 5.78% dividend yield. Which let's see what, they're in some commodities like refining, chemicals, marketing. So how's that growing? So look, marketing and services, that's down 10% after falling 8, after falling 20. Their main business, refining and chemicals, is down 12 after it fell 4. So yeah, the commodities have been declining. Yeah, so look at this. The revenue, still good money, 44 billion of revenue. It's insane. The revenue fell by 9%, but the net income fell by 28. So that means their net margins, yikes, the net margins are falling even more. That might be why, again, they just sell a commodity. They almost look like oil. But there you go. I don't know if I would expect that to outperform the market in the long run, but I like those big numbers. Safety in a big market cap. So Joby Aviation right here, this one, I just can't trust it right now just because of the fact, if we go to the revenue right here, just because the fact that there is still basically no revenue. The revenue is $15,000. And if you go to the net income, they lost $330 million of net income this quarter. Like, that's rough. Like, you're really, like, everything has to go perfect here for, what's the market cap? A $14.7 billion company, basically a $15 billion company, with no revenue, losing a couple $100 million a quarter. What are the expectations? I mean, the revenue is going to be $3.5 million in 2 quarters, but I don't see much value in there. Besides momentum, it's a nice momentum swing trade maybe, but yeah. Hopefully that was helpful. I just try to warn people, like, just don't love, if I'm going to put my money in a stock, I at least want to, be profitable, have some numbers. Someone said, which app is this? Hey, what up, Arch? Yeah, by the way, this is a brokerage where you buy stocks on. Yeah, if you want to get it, it's in the link tree in my bio, the very first link there. They ask you for a bunch of information. It's a brokerage, you get a tax form, but it's also an affiliate link too. So if you go to deposit $100, we'll both get some free stocks. Pretty cool. All right, Steven said AT&T. Here's another company, like if you are 10 years away from retirement, let's say you're 10 years away from retirement, this isn't a stock I'd recommend because look at this. AT&T, we use AT&T. I wonder if that'll show. Yeah, very top left, you can see AT&T. We use their service, but I wouldn't own their stock unless I was close to retirement and just wanted income. But yeah, AT&T is literally the exact same price that it was in 1997. So you bought the stock, 25 years ago, and it's not just AT&T I'm picking on, it's the whole kind of telecom industry. It's not the whole telecom industry because T-Mobile is an absolute unit of a stock performer, but if you go to Verizon is also the same stock price that it was. Look, Verizon is the same price that it was in 1998, so yeah, it's rough. What up, Bobby? He said, my grandfather lived off AT&T and Verizon. Well, look at this. We just looked at both AT&T and Verizon. This is sad because basically he's just gotten, the dividend every year. I don't know when he bought it. Maybe he could, but basically, he's only received the dividend every year. He's got no stock price appreciation. There's no stock price appreciation. You only basically get the dividend with this. So I just, if you're, again, 10 years away from retirement, wouldn't touch those. Hey, hey, Tark, again, if you want to get this brokerage I'm on, there's this app I'm on. It's in the link tree in my bio, very first link there. Let's see. Okay. Oh, let's get to Nebius right here. That's another stock owned by NVIDIA. I love going over here. If we go back to the NVIDIA portfolio, we'll look at ASTS, Space Mobile. Oh, and DHR. What up, Nigel? Good to see you, friend. So yeah, in the NVIDIA portfolio, one of the stocks they own is actually Nebius right here. They just got a huge deal from Microsoft. If you go to the weekly news, Nebius signs a $17.5 billion Microsoft deal and revealed strategic stakes in AI companies. Wait, it took a stake in a company? The company plans... I don't want to read all that. But anyway, that's interesting. They're probably going to take a stake into another company. What I love about Nebius specifically, and why it's not just some trash stock propped up on momentum. No, this company has good growth, good future expectations. Like the revenue already, before this Microsoft deal, the revenue already went from 14 mil to 100 mil. I mean, talk about growthy. From 15 mil to 100 mil. It's 100 mil this quarter, a record. It's expected to be 265 million in 2 quarters. I mean, talk about growth. So there you go. Some of the Microsoft Azure Cloud is going to be on Nebius's servers. Pretty cool. Would I touch it here? Probably not, but they're interesting. Which app is this? Hey, by the way, again, if you want to get this app I'm on, this is a software or brokerage where you buy stocks on. It's in the link tree in my bio, very first link there. And it's an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get some free stocks. Pretty cool. Carlos said Apple. Oh, wait, we got to get to ASTS. Remind me to look at Apple. I really want to get to that one. Hey, we'll try to get to AEHR. My bad if I don't get to all the stocks here. I do try and go quick with all these. But yeah, here's ASTS Space Mobile. This is mainly a future play because right now, if we go to their right now numbers, it's bad. It's $1 million a quarter. So they're doing $1 million of revenue a quarter. But check this out. This is what I find the most interesting about the stock. The analysts expect 22 mil of revenue last quarter. And the quarter after that, 35 million. So there's a lot of future growth expectations. So someone said, what happened to ASTS Space Mobile? I think it's just having a little healthy RSI retrace because there's so much future growth priced in. It's like, it's priced to perfection. If they miss on any metric by a little bit, it's going to be probably a tough decline on earnings day. But there's just a lot of growth expected in the future, and that's why I think they've been really momentum-y. Hey, Henry, you did not miss BMI. I did not get to that one yet. I'm so sorry. So there's so many stocks I want to get to here. So DHR, is that Donna here? I think they were up. Yeah, look at that. Up 7.5% on the day. There must have been. Oh, they reported earnings. Let's see. Actually, it should show us right here. So they beat on revenue. They missed on net income, but they beat on EBITDA. So they must have had a little one-time adjustment to their net income. Wait, is this the most recent quarter even? Oh, wait, no, that actually ignored those estimates we just looked at. That didn't even have the most recent quarter. This is what they reported. So the sales were up 4.4. Net income grew by 11, so they did grow their margins. They're making, 50 to 100 million, or 500 mil to $1 billion of net income a quarter. So yeah, this quarter, when it says they only made 555 million, that was their little one-time adjustment. They actually made more than that. So they were expecting I don't know. There must have just been some good news there. They reported earnings, and it's just too early for me to look at their earnings, unfortunately. So I wish I could help you out there. So Uber stock. We'll look at Uber and then BMI. Okay. So Uber is a great software name. This is a stock I would happily own forever. Yeah, hey, yo, we'll probably get to IBM, but it might be 10 minutes. I really do want to get to all these stocks here. I'm sorry. But here's Uber right here, a perfect software name that is, I would buy it right here and I'd never sell it. This is a stock you never want to sell. If we go to their monthly active consumers, not just monthly active users, but monthly active consumers is 180 million when the same time last year it was 156 million. So they're growing their active users like crazy, and they're still growing even after COVID's gone. Revenue's up 19, after it grew 25, after it grew 37. The growth rate's slowing down a little bit, but it's normalizing as the numbers, get bigger. Not just the mobility revenue either, which is most of the business, but also the delivery side, the Uber Eats. That's up 25, after it grew 8, after it grew 14. So both businesses are on an actual streak, and they're not just growing their top line, but also the bottom line. Check this out. The FCF, which is free cash flow. Look at the growth rates. 2 to 2 billion plus of free cash flow quarter. Same with net income. These growth rates are insane. So Uber's a great growthy software name that's expanding margins, making money, taking stakes into Grab and stuff. I just love them. I wish they'd come down a little bit. So BMI, this is Badger Meter. They sell water meters. It's actually really interesting, something that can't really be replaced with by AI. They've been struggling on their last earnings report, but look at this stock historically. I mean, here's the 2020 crash. I mean, this is historically a super growthy company. They just sell, something everyone needs. Yeah, we can see their revenue just hits a new record every quarter, every year. That's really good growth. Net income is 30 to 40 mil of net income a quarter. What's their margin? 15% margin. That's respectable. So they're making 30 to 40 million in net income a quarter. Let's go see how much the dividend cost. The dividend only costs 10 mil of net income a quarter. That's why they actually have some room to raise their dividend. What's the yield? A 0.75% yield. Look at the growth. Wow. I'm actually going to re-add them to the top of my watch list. I like niche companies like this. They just sell water meters. All right. Why don't you invest in BILI? I've never heard of that one, so that's probably why I haven't invested in them. Oh, well, first off, they're an ADR Chinese company, so I probably wouldn't touch it just for that reason, because that's just like not a market that outperforms. Like this stock is the same price that it was 6 years ago, and you pay the yearly ADR fee. But look, which isn't much. Let's go look at their numbers. Let's see. I can't wait to see actually. So We converted the currency from Chinese yuan to USD. Here are their active users. Let's see. So daily active users were at 102 mil. Now it's 109 million. So check that out. They grew their daily active users, which is great. Let's check out sales. Revenue's growthy. Revenue's up 21 after it grew 15 after a decline, but the revenue's grown. And they just now, looks like for the first time ever, are consistently making real net income. Did they do an acquisition or something? No. Well, actually, yeah, they've been buying something. Oh, Tencent is the second largest shareholder. Honestly, it's not the end of the world as long as they can keep, stay net income positive. But these Chinese companies just don't outperform U.S. markets. Just look at the Chinese version of the S&P 500. But there are some Chinese stocks I love, like FUTU and Tencent. Dude, Tencent, the best Chinese stock of all time. If you're looking for now, one with real good fundamentals. Does KFC got stock? They do, I believe. Yeah. Someone said, is KFC publicly traded? They are under the name Yum Brands. Actually, if you didn't know, here's a cool story. Yum Brands, which again, this Yum Brands owns KFC, 43% of the business. They own Taco Bell, and they own Pizza Hut. So basically, if you didn't know, all three of these companies or Yum Brands used to be owned by Pepsi. So if you own Pepsi stock, you used to own all those restaurants as well. But they actually spun off Yum Brands, but they have a lifetime permanent contract to only sell Pepsi products. That's why if you're ever going to a KFC or a Taco Bell, you only see Pepsi products, like a Baja Blast, a Mountain Dew, a Powerade, all that kind of stuff. Hey, unboxing. Hello, new to your live stream. Hey, what's up, man? Hey, yeah, if anyone's new here, we just look at stocks and stuff. If you want to hit the follow button, we stream every single day, sometimes twice a day. I sell nothing, literally nothing. I have no course, book, WhatsApp, Telegram. I'll never follow you, DM you. Only thing I ask is if you hit the like button, subscribe if you want. So let's see. Remco said WSM. That's William Sonoma. Hey, Looney, remind me to get to Lamb Research. I do want to get to that one. Hey, Tyler, thanks so much. You said great content, just subscribe. I appreciate that. So here's Williams Sonoma. They sell paint. And this is an kind of interest rate sensitive sector, but the stock is like on a mind of its own. Like done way better than the home builders. Like they've done great. And let's see what they do. Yeah, they make great net income. I'm surprised. Wait, Williams Sonoma. Wait, that's not the paint company. Or maybe it is. Yeah, I think they sell paints. Williams Sonoma, pottery. Okay, well, anyway, they make good net income, easily 250 to 350 mil in net income a quarter. So, the sales are a bit slower growing, probably just because of the high rate environment. Sales are only up 3, but it's better than this decline. But the revenue is up 3, but the net income is up by 14. So they expanded margins. So they still have pricing power even in a declining sales environment. And they pay a dividend. And remember, we were just looking at them. They made 250 to 350 mil a quarter. Well, they pay a dividend, and the dividend only cost 80 mil a quarter. So since they have so much leftover money, they're spending more on share buybacks than they are on their dividend. They literally spent $200 million buying back their own shares this quarter. 100 mil, 500 mil. I mean, they're doing insane buybacks. And those are the kind of companies I want to own. You get a 1.3% dividend. How much share buybacks did they do? Net income's up 14, EPS is up 19. So So they bought back 4% of the shares, and you get a 1.3% dividend. That's a shareholder-friendly company. I love that stock, actually. They're great. Okay, Random said AMPX. Yeah, actually, I really like this company. What stock should I invest in right now? What up, Aussie? Yeah, I don't know. The S&P 500 maybe. You have made me a favor. You made me a forever holder of FIX. Yo, Joshua, that's what's up, man. I'm also a forever holder of that company. They're great. And remind me to look at Serve. There's so many stocks I want to look at. Yeah, you're right, Derek. I'm thinking of Sherwin-Williams. Yeah. Sorry. Williams Sonoma. That must be some other company. Okay, well, anyway, here's Ampress Technology. This is a very small one, a $1.5 billion company, and they've had some insane momentum. But here's why they've had so much momentum, and here's why I think they might deserve it. This is a battery segment, but there's just a lot of growth expected. The revenue was 10 million. It's expected to be 20 million. And then notice they beat by a huge margin every quarter on their numbers. They're beating on revenue every quarter. They're beating on net income losses every quarter and on EBITDA. So they're triple beating. No wonder they're gapping up so much on earnings. And, the sales went from 3 mil to 15 million this quarter, going to go to 20 mil. So they're just a really growthy company. I'd still be real careful with them. They have a good balance sheet, safe balance sheet. They're barely losing any money now. They lost 6 million and the losses narrowed by 50%. Like everything here is headed in the right direction. So we just want to see them continue this growth. Any miss on the growth will probably hinder this because they're almost priced to perfection with a lot of this momentum. But, Yeah, if they beat on expectations, like they're just going to continue to go higher. I love Baja Blast. What up, Daniel? Did BMI cut their dividend? I don't know. I know you like CEG, but can you look at VST? Might be better value at their current valuation. So yeah, here's the difference between VST and CEG. These are your main two nuclear plays. So by the way, I've looked at all the nuclear stocks out there. I've looked at Constellation Energy, Vistra Energy, GE Veranova, Oklo, SMR. I've looked at all of them. And out of all the nuclear names, in my humble opinion, my own research, this is the best one out of all of them. They literally own 30% of all the US nuclear reactors, about 25 nuclear reactors. Well, Vistra Energy only owns 4 nuclear reactors. So they own a lot less, but still, it's the second biggest nuclear play out there besides Constellation Energy. And they've also been doing really good. If we look at the sales, they're growing every quarter, but look at this consistent net income. They had a little one-time adjustment last quarter, don't worry about that. But if you average it out here, they're making easily a couple $100 million in net income a quarter. You get a half a percent dividend, only a 12% payout ratio. That must not include this. Yeah, that was for the last full year. So it was looking at those numbers. Okay, yeah. Anywho, yeah, this is basically, they should perform similarly to CEG. Let me actually overlay the two charts here. I want to see the difference. CEG versus VST. Yeah, actually look at that. As you can see, they rhyme together, like they fall together, then they rise together. But it looks like Vistra Energy has been slightly more growthy. But as you can see, these stocks nearly perform similar. So yeah, pretty cool. Drew said another stock is EIX. Well, I don't love this one just because of where they're located. If you're wondering what is this company, this is a California utility, and I just don't like California. But anyway, if you're wondering what happened here, there's no earnings news this day. Why did the stock tank? Well, does anyone remember in January of this year in California where all those houses burned down? There was all those wildfires. Well, guess what? EIX was to blame for that. One of their utility were supposedly, I mean, they probably didn't do it, but they still got slapped the fine. But one of their utility poles caused the fire. So that's what happened with Edison or Consolidated Edison. But they're still making great money. I mean, easily 500 mil to basically, if you average it out here, like 800 mil to $1 billion a quarter, you get this is mainly a dividend play, a 7% dividend yield. But I just don't really expect this to outperform the market in the long run. I mean, actually, if you technically, this stock is the same price that it was back in 2007. Again, it's really from this huge California mess, but I don't know. If you're just looking for they probably still might have a safe dividend. I don't know what defines. Maybe it's all priced in. Honestly, it might all be priced in. I don't know. So it's a mixed bag here, but I love the utility industry. Here's the VPU, Vanguard Utilities ETF. And all this good stock price appreciation doesn't even include the 2.5% yield that it pays every year. So pretty cool. But my place didn't have Pepsi, Coke. Oh, hey, what up, Mr. Ask? Really? LRCX. So this is Lam Research and another semiconductor play. I love this stock. Yeah, hey, try not to spam their camera. We'll get to AutoZone. That's a huge buyback play. But yeah, here's Lam Research right here. The dividend is nice, a 0.6% dividend, but I say it's nice because of the growth. Check this out. I mean, the dividend was 50 cents. Now it's 92 cents. So a nice growth to the dividend. I just love how growthy they are. If we go to the revenue's up 35 after it grew 20. So they're on a nice streak. So revenue's up 35, but net income is up by 69. What does that mean in English? It means they're expanding margins whenever net income grows faster than sales. So their net margin went from 25 to 33, and that just goes straight to the bottom line. That's great news. So the payout ratio is even lower because this is based off the last full year. The payout ratio is even lower. Wow, it's potentially going to be 40% lower, that payout ratio. Holy smokes, because of that EPS growth. Yeah, they're beating. Look at that big beat on net income. Yeah. This one deserves to be at an all-time high. Man, do I regret not buying them. Okay, so AutoZone right here, this is basically your recession resilient play and also share buyback play. So most companies, whenever they make a bunch of money, they share some of that with you via dividends. Like they'll pay out 40% of their money in dividends. But here's the unique thing about AutoZone. They actually return money to the shareholder, 40 to 50% of their money every quarter in share buybacks. Hey, Shrek is too. Hey, Shrek, dude, thanks for all the gifts there. You got a stock you want me to look at? Let me know, Shrek. And Zone 17, if you got one you want me to look at too, let me know. I got you. Oh, well, yeah, we'll look at HOND. Yeah, bet. So AutoZone, though, like even in a recession, you got to get your oil changed, your tire fixed, whatever. You're still going to AutoZone even in a recession. So they're seen as recession resilient. But the reason the stock doesn't fall, like if we go look at their numbers right here, this is not the kind of stock that really deserves to be, that growthy. The sales are low single digits, 3, 5, 0.6 versus revenue growth. But the reason the stock never goes down is because they don't allow it to, because they just buy back their own shares. Actually, let me share. I'll be super, super quick about this. I'll actually show you the exact share count number and how it's fallen. So again, if they instead converted from share buybacks to dividends, you would get paid like 5% a year. But okay, here's their shares outstanding right now. If you look in the bottom left, is it going to load here? Oh my goodness. Hold on. I can pull up the total common. I think my phone that's annoying. Hold on here. 1 second. The Apple Play just disconnected from my phone. Thank you very much, Apple Play. And now it doesn't want to reconnect. Well, give me 30 seconds here. I might have to reset this app. That would be annoying. Beyond Meat backed by Bill Gates. Really? I didn't know that. Maybe the Bill and Melinda Gates Foundation. Dude, this thing is really not wanting to load. Okay. By the way, sorry, if you want to hit the follow button, we stream every single day, by the way, sometimes twice a day. This never happens. Oh my goodness. Okay, let me see if I can do this. This would actually be clutch if this works right here. Unable to connect. Well, I'll do it one more time. Oh, well, it says it's working now. Oh my goodness, I'm losing so many viewers. Okay, hold on. I guess, actually, you know what we're going to do? We're going to go on my old phone. We have my old phone. We're on a completely different phone now. Just screw that phone. Okay. So it actually is going to look slightly different. What were we looking at? I don't even remember. Okay. Well, so whatever stock we were looking at, sorry, we're no longer going to look at that one. Yeah. Hey, Pierce. Yeah. Well, yeah, I'm surprised this, okay. What was it? HOND. Yeah, what up, Shrek? I appreciate your gift there. If this doesn't work, I might also just have to end the stream here. But this is one of those blank check companies that basically just acquired a business. So they're worth $550 million. They just acquired something, because if we go to their balance sheet right here, before today, the assets were nothing. The assets were 16,000, but now it's 240 million in the most recent quarter. Oh yeah, we were looking at AutoZone and their total common shares outstanding. Oh well, doesn't really matter. You just know that AutoZone, their share buybacks are going down like crazy. Miller said, do you only have one TikTok? Well, technically I have one. By the way, I'll never follow you or DM you. My only other TikTok is called Stocks Live, and I haven't been on it in months no, I don't. So yeah, watch out for people impersonating me. I'll never follow you, DM you. I sell nothing. I have no course, book, WhatsApp, nothing like that. VST is highly debt leveraged. Is that concerning? I don't think it is. Not for Vistra Energy specifically, just because of their net income growth expectations are nuts, like double digit through the end of the decade. What about Adecco? Hey, Tomek, what up, dude? Good to see you. If you give me the ticker symbol, I'll check that one out. Mr. Ask said Samsung. I don't think I can find that one. Yeah, they're a Japanese or Korean company, I think. So let's see here. Can you check out ALAB Financials? Yeah, dude, George, these numbers are phenomenal. Well, hey, hold on. First off, this app is telling me, what is this? There is a bearish continuation triangle. So I guess that's not good. But before that news, this stock is a great one, in my opinion. Like, they deserve to be at all-time highs. Like, if you look at the revenue, what other company is pulling this off? The sales are up 150 after it grew 620. So the growth is insane. And not just on the sales, but the net income, 51 million net income, consistent net income. And look at this balance sheet. This is a fortress balance sheet right here. No debt at all, over $1 billion of cash. The cash from operations, basically free cash flow, is insanely growthy as well. So I can get why. I'm actually looking into that one. Put them on my watch list. Supreme Leaders, what up, dude? You said, what app is this? Yeah, hey, by the way, if you want to get this app I'm on, it's in the link tree in my bio, very first link there. By the way, this is a brokerage where you buy stocks on. So let's see. Hey, yo, Sermon. I think I do. I'm hanging in there, all good. Hey, thanks, Matthew. I appreciate you. Um, let's see. Oh, Nvidia Semiconductor. Well, basically, this has been on some fire momentum ever since Nvidia saved them. Basi- uh, I don't know what the future is going to hold, but this stock was going bankrupt. They were literally going bankrupt, and Nvidia saved them, basically bailed them out. And I still don't see like this company. Their numbers are still like dog awful, and I don't see the analysts. Like I've been waiting for them to revise them. Like I wouldn't probably touch this one besides the momentum. Like if you go to their sales, like here's the revenue right here. The revenue declined 30% year over year. So the revenue is 14 million, down 30%. Well, the analysts are expecting it to go to 9 million next quarter, fall another 40%, and then 10 million. Like the growth is in the toilet here. They're losing for like 50 million this quarter. I don't know what the Nvidia is doing, but it's some sort of like Nvidia bailout to save them from going bankrupt. Still, I don't love that name. They had to be saved. It's a momentum one. Would you be mad if I bought VST over CEG? No, JVM. I think they're both great. They both perform very similarly. Ooh, CoreWeave stock. Speaking of CoreWeave, you know who owns CoreWeave? That's in the NVIDIA portfolio right here. Their largest holding, or NVIDIA's largest holding, is actually CoreWeave. So basically, the reason they were gapping up on these days right here is because CoreWeave used to buy a bunch of NVIDIA chips, and after they bought the NVIDIA chips, like 10 to 15% of those chips would just be sitting there idle, not in use. Well, CoreWeave just got NVIDIA to agree to buy back the unused GPUs. Like I could not believe that they got NVIDIA to do that till 2030. So that's interesting. Also, if we go to the sales, because I think in the long term, CoreWeave is the bag holder of the chips and the data centers as we overbuild. But that new deal is interesting. But check this out right here. The revenue this is a pure growth company. This is insane. The revenue went from 400 mil to 1.2 billion. It's 1.2 billion this quarter. And check this out. In 2 quarters, it's going to be 1.8 billion. I mean, the growth on CoreWeave that's expected is insane. But they're still losing a couple hundred mil a quarter, but analysts expect that anyway. All right. Yeah, ALAB numbers are great. AGRO. Let's check out that one. AGRO. So, this one's actually on my watch list right here. Dang, then they have been on a nasty decline. Let's see if we can figure out what happened there. So the stock has actually been flat since 2013. Yikes. So if you bought the stock in 2013, it's the same price that it is today. They're in sugar, ethanol, and energy. So that's a commodity. But if you're interested in getting exposure to rice, crops, dairy, sugar, ethanol, this is your commodity play. The sales are falling, but if there's commodity inflation, going to a lower interest rate environment, whatever, these commodity stocks rally. But again, these just never outperform the market in the long run. They must have a nice yield too. Let me see. Wow, yeah, 5% dividend yield. So they always trade at low multiples and have high yields. They're like oil. But yeah, just because they're a commodity, it doesn't really outperform. Moomoo does not work in the EU. Oh, yeah, that sucks, Tom. Oh, Mr. Asked Sony stock. Do you mind giving me an analysis on NUVB? Yeah, hey, give me a minute there. We'll try and get to that one too. We'll look at, hey, Unboxing said DCTH. I love Delcath. So SONY, let me pull this one up here. So Sony right here, this is your Japanese company. If you've heard of the Sony PlayStation, they own that. They're in a bunch of businesses. They own like music studios. Let me show you how diversified that they are. This is pretty cool. Obviously, their main business is gaming network, the PlayStation, entertainment technology services. That's like whenever you, I think, buy something on like the store there. But yeah, then they're in music, imaging, sensing, and solutions like those Sony cameras, or Sony Dolby, whatever, pictures, all other. So anyway, Sony's a nice diversified company, and they make good net income. Yeah, so they reported Japanese yen. We will convert the currency to USD. And yeah, look at this. They're making easily 1 to 2.5 billion in net income a quarter. And you get a nice 0.5% yield. They raise the dividend every year. Safe payout ratio. There you go. Can you explain your portfolio? Yeah, hey, if you look in the top left, this is called my buy and never sell portfolio, where basically once I buy a stock in here, I try not to ever sell it. Of course, I have multiple portfolios. Like this, if you look in the very, oopsie. Why is it well skewed off? Yeah, if you look at the very top left, it's called dividend only because every stock in here pays a dividend. Okay. Oh yeah, I wanted to get to Serve Robotics right here. Then we'll look at Delcath. So Serve Robotics, they had a huge partnership with DoorDash. Let me see if it's still down here. No, it's not, but basically this company has done like, I think it was 10,000 like successful deliveries of like food. They're of like a robot car delivering food to a house, but or something like that. I don't know. They're still a startup. I wouldn't trust anything meaningful. I wouldn't trust anything meaningful in this company because look, the revenue is 600,000, 400,000. I mean, the growth isn't the revenue is expected to be 2 million in 2 quarters. But again, I got, what's the market cap? $1 billion. I mean, that's not crazy unrealistic, but yeah, they have a lot to prove still. Oh yeah, SoFi. What up, Landon? Thanks for that. Yeah, SoFi Technologies right here. This is an absolute beast of a company. I do own SoFi, by the way. I might be biased, but I own this company for a reason. And this isn't just propped up on momentum right here. Like this stock deserves the hype because of their growth of the underlying business. We go to their second largest business, or half the revenue basically is just from their financial services revenue, their fintech revenue. Check out how growthy this is. This is what I don't believe. The revenue's up 105, after it grew 80, after it grew 250, after it grew 440. Like they are on an absolute streak of growth. And, not just, top line. Look, even the analysts didn't expect this. The orange line is what the analysts expect every quarter. They're beating on revenue every quarter. They're beating on net income every quarter. And they're beating on EBITDA, like huge margin. Like analysts expected 84. They reported 125. No wonder they're gapping up so much on earnings day. So I think people are just really taking SoFi serious. They made 100 mil of net income this quarter. Nice. Can you look at Samsung? Yeah. Hey, I don't think I can view Samsung. If you give me the ticker symbol, and I'll type it in and see if it works. So Delcath Systems. Now this is an interesting company. Oh, hey, Hazel, is that Northrop Grumman? I love that company. I think they reported earnings this morning. But Delcath Systems, this is never the kind of stock I like to talk about on the channel because look at this stock. They're down 100% all time. So as much as I love this company, again, there's companies out there that look like this that's like, I like their numbers, but as much as I love them, I can't stress this enough. You cannot trust anything meaningful in these kind of positions. So I put $150 in this stock right here. You cannot convince. As great as these numbers look, and it's going to impress you. I feel like after I show you these numbers, you're going to want to buy them, but I can't stress enough how little you have to make this as a position. So check this out. If we look at the top right, the market cap here, this is a $390 million company. So remember that. The whole entire company is worth $390 million. And check this out. They literally have $81 million of cash and no debt. So almost 25% of the whole company, the market cap of what you're paying, is just their cash on hand. So first off, that takes a lot of risk off the table. So 20% of the market cap is just their cash. Here's what you're left with: a super growthy business. The revenue's up, to 24 million. This wasn't a buyback in 2023. The revenue was nothing. But this is why they're the most justifiable buy ever, because they actually have real numbers. The revenue was 24 million, and out of this 24 mil of revenue, this is real. They made 3 mil of net income, 1 mil, and this is what's crazy. So it's basically it's a $390 million company with $90 million in cash. So it's a $300 million company that your X cash multiple. That's super growthy. I mean, we could see the growth expectations. The growth right here, it's up 200% year over year. They're making net income every quarter. And also, here's what's so cool. Since they have $81 million of cash and no debt, they're earning interest on their cash. They literally made $650,000 of interest on their cash this quarter. So anyway, they're interesting. Super risky. Rubric was up today. Hey, nice, Millers. Do you own them? JPS said App Stock. Yo, App Lovin'. This is a great company. That's actually on my watch list. I don't own them because they're still overvalued here, but here's why this stock deserves to be at an all-time high, in my opinion. This is a beast, a monster of a company. If we go to their sales right here, this is so good. The revenue is up 77% year over year. So the revenue is up 77, but the net income is up by 160. Notice the margin on that. The total sales were 1.25 billion, but the net income, the after-tax net income, was 819 million. That means their net margin was a 65%. I can't believe it. I mean, they're normally doing 35 to 45% net margins, but a 65? That's what, in my opinion, just justifies that next gap up. Like, I did not expect that. Like, they print money. Same with free cash flow. They just got added into the S&P 500 as well. There's also an SEC investigation into them. Sony will blow up on GTA 6. Oh yeah, dude, GTA 6. That should be interesting. Hey, Nigel said grab stock. Hey, yeah, let me pull up that one. Would you pick PayPal or SoFi at the moment? Yo, That's the thing. I honestly don't want to own PayPal. Well, honestly, PayPal. Honestly, I'd probably just pick PayPal, but I just because I'm up so much on SoFi. If we go to our SoFi position right here, hopefully it doesn't show my password, but whatever. Um, yeah, we're up 380% on SoFi, so it would be tougher. I don't know though. I love SoFi in the long run. SoFi is a more growthier pick. But here's Grab Holdings right here. This is another stock I absolutely love. Hey, Miguel's Auto, what up, dude? Good to see you. Could you look at Rubrik? Yeah, we'll look at Rubrik too. So yeah, Grab Holdings. If you're wondering what does this company do, they literally do exactly what Uber does, but in all these other countries. Notice the US and Canada isn't on here. It's Malaysia, Indonesia, Singapore, Philippines, all these international countries. But they literally do exactly what Uber does, plus a little financial tech help. But they're super growthy. The revenue's up 23. And they're making net income every quarter. They've made easily 10 to 20 mil every quarter the past year. They're free cash flow positive. More growth is expected. The revenue is 820 mil. It's expected to be 930 mil. And the best part is they're backed by Uber. If we go to the very largest shareholder is Uber. So 13% of all the revenue goes back to them. And that, in my opinion, was genius by Uber because this gives Uber instant international diversification. And then there's also Toyota Motor. Toyota Motor owns 5.5% of the shares. So they also have a good balance sheet. So NUVB, so let's check it out. Nuviation Bio, and then we'll try and get to Rubrik after this. You mentioned SoFi is great, but still a PE ratio. Yeah, dude, you're right, Daniel. SoFi trades at like 50 times next year's net income. It's really expensive. But yeah, Nuviation Bio, they're a $1.4 billion company. They've seen some nice momentum in the past couple of days here, but when we scroll to the weekly, they're down bad from their 2020 IPO. Let's go figure out what happened here. So oncology development, who's huge in oncology right now is Johnson & Johnson. Like they're seeing massive growth and specifically their oncology business. You know what? I'm actually going to put them on my watch list just because specifically today I was doing so much research on Johnson & Johnson's oncology business. By the way, I was going to say this for later, but I think Johnson & Johnson, as boring as it is, has another 30% upside. But yeah, they're basically just now getting revenue positive, 4.8 mil of revenue. But this is the part that scares me. For Nuviation Bio, what's the market cap again? The whole company is worth 1.4 billion. But this is the tough part. They lost 59 mil, 50. So they lost 200 million in net income, and not to mention that quarter where they lost 400 mil. But when you lose net income, that number has to come from somewhere. So the liabilities, the assets, the liabilities went up. The free cash flow is negative 50 mil a quarter. I don't love these negative numbers, but check out the growth expected. This is what honestly makes me happy. First off, as you can see, they beat every quarter on revenue expectations. Analysts expected 400K, but in two quarters, they're expecting 16 million. They're expecting those losses too. So yeah, real quick thing for Johnson & Johnson. I think this one even today probably has another 25% upside. And you get a nice yield on Johnson & Johnson as well. This is like the most blue chip of blue chip names ever. 50 years, literally 50 plus years of dividend growth where they never had to cut their dividend once during 2020, 2008. You get a 2.65% dividend. The debt is nothing. They can pay out, like, as you can see the liabilities here, you see the liabilities. Well, I can show you the exact debt. They could pay off all their debt in 2 years of free cash flow. Just 2 years of free cash flow. They can pay off all of their debt. They had a record operating profit. Anyway, Johnson & Johnson's interesting. I'll actually put them on my watch list too. Specifically for their oncology growth. Okay. What's a good price to get in Grab, you think? Oh, I forgot the current price. Probably, it might even be worth nibbling right here. I wouldn't, if I wanted Grab as 5% of my portfolio, I wouldn't make it 5% today, but I'd honestly nibble and make it maybe 1% today. Thanks for no problem, FE. Hopefully that was helpful there. Sorry if I don't get to y'all stocks. I do try and get to all these here. Like, let's see, ARR. Well, that is, hopefully you're not talking about Armor Residential REIT. You're probably talking about America Rare Earth, or I don't even know what this. Honestly, both of those are trash, and I wouldn't want to cover either of those. Oh yeah, let's get to Rubrik right here. Rubrik, this is a cybersecurity play, RBRK. So yeah, if you're talking about Armor Residential REIT, that is a dividend trap. Please don't buy them. Yeah, Oracle Rick said Moomoo blows Robinhood out of the water. Yeah, or I agree with that, dude. That's why I basically switched over to Moomoo. I still have my Robinhood portfolio just because I don't no reason to get rid of it. But I do. That's why I go to Moomoo. I do all my analysis in Moomoo because this brokerage right here has the best tools ever. It's free. It's lower fee than Moomoo. So that's why I like this brokerage more. By the way, if you want to get this software I'm on or this brokerage I'm on, it's in the link tree in my bio, the very first link there. But yeah, here's Rubric right here. There's a lot of cool tools you get. Like you can see the analyst ratings right here, like the exact analyst and who did it, and you can see their rating and stuff. And then you get the Morningstar research too, which is pretty cool. And then you can read what like the bulls. Well, not for this stock, but anyway, let me get back to this stock right here. They're super growthy. Like every quarter, they beat on revenue. Does Moomoo do crypto? It does do crypto. Yep, nearly every crypto you can buy, like the top 50 market cap ones. Yeah, whoa. So they beat on revenue every quarter. They beat on net income losses every quarter, and they beat on EBITDA losses. They were expected to lose 58 mil of EBITDA. They only lost 4. Wow. Okay, so that's why this one's on my watch list. Actually, this one's on my hidden gem watch list, actually. So one other cool thing, first off, this is growth right here. Check this out. The revenue's up 51 after it grew 35. So insane growth. And they also made part of that growth was from an acquisition. If you go to the cash from investing activities, again, if this number is negative, that means they bought an asset, they bought a company, they bought land, whatever. They spent $735 million buying a company, which is pretty cool. So that led to some of their growth, but this is just a growth beast, beating on every expectation every quarter. So yeah. All right, so I see you're good with technicals. Do you have a corporate finance background? No, hey, by the way, I'm not an expert. I'm actually in college right now. By the way, I saw nothing. I have no course book, WhatsApp, Telegram. Yeah, hey, yeah. If you want to get this brokerage I'm on right now, yeah, this brokerage is called Moomoo. You can just type it into Google. By the way, it's a brokerage, so they'll ask you. They send you a tax form every year. They ask you for all your information and stuff. But yeah, if you want to get it, it's in the link tree in my bio. Very first link there. This is my favorite app to if you're interested in buying stocks, you got to have a brokerage to buy stocks on. This is my favorite one because lowest fee, no fees at all. Link tree in bio, favors link. Okay. And it's affiliate link too. So if you go and deposit like $100, we'll both get like some free stock. So full disclosure is affiliate link. Okay. Oh yeah. And it does have crypto. Someone asked about crypto. So yeah, there's all the crypto you can buy on here and tradable coins. These are all the tradable coins right here. There's a bunch of them. I mean, so anyway, here's someone's up here just for the features. Look at this other cool feature. You can also, of course, track all the super investors' portfolio, like Nancy Pelosi. She has to make all her trades public by SEC law. So we can see all her holdings, like Warren Buffett, all his holdings, how his performance is done versus the S&P. And another last feature, and then we'll get back to the stock analysis here, which I did want to cover actually. If you go to stocks right here, they have a bunch of like investment themes, basically ETFs where you can like find new stocks. I'm going to do a stream one day where we just look through all this right here, look for some cool stocks. And we were looking at the drone concept stocks, like AVAV is really good. Kratos is actually good. Some of them are also really trash. So we want to pick the right ones. We looked at some robotics names, like Symbiotic is great. Anyway, but the main feature I wanted to share with you down here is actually the interest rate cut probability tracker. Look at this. The FOMC on the October 29th meeting, there's a 96% chance of a 25 basis point cut. December 10th meeting, there's a 94% chance of a 50 basis point cut, just based off the Fed dot plot expectations from the FOMC members. They expect 3.63 by end of year end. Anyway, they just have literally every freaking, this just has everything. Anyway, yeah, again, if you want to get this is a software where you buy stocks on. If you want to get it, link tree in bio, very first link there. Okay, so anyway, sorry about all that. Let's keep going here. Ooh, let's see here. Next payday. Hey, nice, Matthew. Why? You can invest in crypto on here. Yeah, you can do crypto on here. Okay, let me get back to this though. Let's look at some more stocks here. BMEB. BMEB. I can't find that one. SE. So SE stock, this is a cool e-commerce play. This is actually like a international Amazon, I think. Let me actually check out where the revenue comes from again. So yeah, do beware, none of this is from the US. Southeast Asia is 70% of the revenue, Latin America. But here's what they do. They're an e-commerce play, basically like an Amazon. And then they also have a digital financial services platform. How's that growing? Whoa, that's up 69 after it grew 36, after it grew 200. I like how also on this app, it breaks down where their actual revenue comes from and international, where it comes from international. But yeah, digital entertainment as well. Anyway, let's go check out the growth expectations. Revenue is expected to hit a new record. EPS is supposed to hit a new record. Same with EBITDA. So everything here is headed in the right direction. I can totally see why they've had this massive momentum the past couple months. They deserve it. I also love Shopify. So yeah, they report in USD. They're easily making, 400 mil this quarter. It used to be, it was really cyclical, rough back here, but they're finally nailing down consistent profits on that company. Nice. Um, do we get a stock of FIFA? Wait, I think FIFA is owned by EA, and I think EA, if you look at the stock, yeah, if you're wondering why stock looks like this, why it's flat, it's because they're getting taken private. So yeah, actually, EA is the company that gets taken private. Do CAN. All right, let's do CAN stock. This is Canaan. Okay, let's check this out right here. This is a $900 million company, so a very small market cap right here. But let's go look at their numbers because that's what matters. Single segment revenue was 100 million this quarter. Whoa, and it's expected to go up to 150 million, basically from 88 mil to 150. Revenue is supposed to double. Net income is supposed to go, the EPS is supposed to go positive. So that means that they're supposed to make net income in 2 quarters. I mean, if that's true, the momentum on this name might be insane. I mean, the revenue's already up 39% to 100 mil, and it's going to go to 150 mil. They're going to, Well, anyway, they're interesting. What industry are they in? Let me go check, actually. They're in the crypto hardware, crypto blockchain. Wait, they're Singapore. Okay, so first off, this company is headquartered in China. So this is a Chinese company, engages in developing and selling Bitcoin mining machines. So they sell Bitcoin mining machines. Okay, anyway, so GPUs are, well, that's interesting. Let's see here. NU Holdings, what up, wine opener? Yeah, so NU, this is actually a stock I love. It's also another crypto adjacent play. We just looked at that one. That was some like Chinese crypto company. This is actually a South America or a Brazil crypto company. They're actually a crypto bank out of Brazil. Check this out. 92% of all the revenue just comes from Brazil. And that's actually the market you want to be in for crypto transactional purposes because their currency sucks down there. So if you go to the revenue, this is great. The revenue's up 30% after it grew 52, after it grew 62. Like they're on a streak of growth. That, like, I'm not just recommending this stock just to the industry. Like, I love the numbers and not just revenue, but the net income. The after-tax net income is 500 mil to 600 mil a quarter. The growth rates are insane. So NU is definitely one I like for sure. They're not just from a numbers point of view. All right, so man said UEC. So UEC, what up, man? So UEC is actually a uranium play. So uranium, they actually bought a uranium mine off Rio Tinto. So they're one of the few uranium stocks that isn't just like all momentum. They actually do have a good uranium mine. But check this out. If we go to the revenue right here, look at that, 49 million this quarter. I think that's like a, record for the year, which is good. They have a fortress balance sheet, don't have to worry about debt here. So yeah, they have they lose net income every quarter, 10, 20 mil a quarter, no big deal. But because of this balance sheet, they can easily afford those losses. So it's no big deal. Anyway, this stock mainly just follows the momentum around the uranium industry, because if you didn't know, we're trying to no longer source by the way, this is ticker symbol URA. This is just a global X uranium ETF. And as we can see, it's been on fire, just the whole ETF, which UEC is one of the largest holdings in here, I think. UEC, yeah, third largest holding in here. But yeah, we're trying to source our uranium from the US and Canada now. We're no longer buying our uranium from Russia and basically from China. China doesn't want to give it to us either. They don't want to give us the power. So we're trying to be more resource mineral independent. My favorite uranium play of all time, if I had to pick one, gun to my head, would be CCO. Not this CCO. That's Clear Channel Outdoor. This is that the company, the zombie company that pays more interest than but I love their assets. But here's Cameco. This is the best uranium play out there. If you were going to buy uranium stock at all-time high, I'd pick this one. They're an ADR. I think they're Canadian. Yeah, they're Canadian, so cool. What do you think of Oklo? Yeah, Oklo is pretty trash. This is one of the worser names out there. Probably yeah, so if we look at the top right, the market cap, this is a $21 billion company. So remember that market cap. The whole companies were $21 billion. This is a startup. They have no revenue. The revenue is zero. And they won't have any revenue for at least another year. So it's just hard trusting this one at a $21 billion market cap. So that one's a pure momentum name, though. They want to make those SMRs. Oklo wants to make these SMRs, these small modular reactors. And if you didn't know, there's only 3 working SMRs in the whole world, and none of them are in the US. So this is a complete proof of concept that I wouldn't touch that one. Do you have any stocks in GE Aerospace? No, dude, I wish I owned GE Aerospace. They're a beast, largest market share, no real competition can even enter the market. Digital Bank 2, yeah. BME, please. What is BME? BlackRock Health Science Trust. Unfortunately, this looks like a dividend play. Yeah, yo, that's bad. Yikes. This stock or this ETF is the same price that it was in 2014. So it's literally the same price that it was in 2014. But here's why people like them, because of the dividend. Check that out, an 8% dividend. So you're mainly buying it to maximize your dividend income. Yo, a 1.1% expense ratio. That is rough. I honestly, this is no different than basically a covered call ETF. I wouldn't trust it. I wouldn't expect it to outperform the market in the long run. What about ADM? Yo, that's Archer Daniel Midland. So this company is wait, did I own this company, or guess I traded it this day or something? Oh well. But anyway, or ADM, they sell things like corn. Actually, one of the reasons the stock fell, does anyone remember? This is a while ago. So if you have a good memory, like the they said they want to remove the corn syrup out of Coca-Cola and replace it with cane sugar. And that tanked ADM stock because they're the largest producer of corn syrup for Coca-Cola. Um, yeah, ADM is the main is like the only basically provider of corn syrup to Coca-Cola. They just sell a commodity. Of course, and the commodities aren't doing great. You know, their revenue's down 5 after it fell 12, after it fell 8. So they're on a nasty decline, but they're still making profits. Like they're not going bankrupt. Certainly not. They're still making a couple hundred million of net income a quarter. You get a 3.3% yield. They raise the dividend every year. But again, they're just related to commodities, and these just don't really outperform in the long run. I mean, they've actually done pretty good. I don't know. So honestly, there's your corn syrup commodity play. There you go. I'm big on Oklo, but isn't looking too good. Yeah, hey, Zweibler, if you just like Oklo because of the nuclear industry, the best nuclear stock out there is Constellation Energy. I've looked at all the nuclear names, CEG, VST, Oklo, SMR. This is the best one by far, is CEG, Constellation Energy. They own legit 30% of all the US nuclear reactors. So if I was going to buy Oklo at all-time highs or CEG, well, they're both a little off all-time highs, but I'd rather buy CEG because they're not a startup. Yeah, Oklo still has no revenue and won't have any revenue for like a year. Where are you from? I am from the US, East Coast. So yeah, it's 2:07 for me right now. Market closes in 2 hours. I got crushed today, silver and gold. Oh yeah, hey, look at JNUG right here. Basically, this is the daily gold mining ETF, and no, man, it's down 20% today. So yeah, this is an ETF I know a lot of people like to bet on the gold and silver mining companies, the junior ones. But yeah, it fell 20% today. That's rough. Yikes. Yeah, David said, okay, this is a weird ticker symbol. We'll try and find it. KRKNF. I can't find that one, unfortunately. Oh, is that Kraken Robotics? Yo, that's actually a different ticker symbol. That's like PNG, I think. Let me know if you want me to view that one. We have cane sugar in Europe and it tastes better. I tried US cola. Hey, yeah, I was in Cancun like 2 years ago and the Coca-Cola was way better. And the Doritos there, I could taste like the corn in the Doritos. It was good. Okay, so I see a few comments about Astera Labs. Let's do this one right here. So I like this one. Basically, if you're wondering why did the stock gap down here, this app is telling me that there is what is this? A bearish continuation triangle. Yeah, basically the reason the stock gapped down on no earnings is this news right here. Astera Labs partners with ARM for AI chip development. Apparently, investors are seeing this as a win for ARM and a lose for Astera Labs. But here's why this one's on my watch list and why I'd actually look into buying this one. And they're on my watch list right here. Because of how growthy they are, they're beating on their growth expectations every quarter. But if you just go to the revenue, check this out. I mean, the revenue's up 150, after grew 620. I mean, the revenue just hits a new record every year, every quarter, and not just revenue, but also net income. I mean, this is the kind of stock I'd happily own. I'd love to own. They're printing money now, 50 mil in net income. They also have an absolute fortress of a balance sheet. If we go to right here, literally no debt at all and over $1 billion of cash. And they're beating on expectations. They beat by double on EPS. They expected 11 cents. They reported 29. No wonder they gapped up so much on earnings this day. But yeah. All right. PNG. Oh yeah, let's get to PNG right here. So yeah, Kraken Robotics. There was just, I don't know if there was any news today, but the momentum has just been insane. You know, the momentum's just been insane on a lot of stocks. Like Rich Tech Robotics has been insane on that one. But yeah, I'd much rather buy Rich Tech or I'd much rather buy Kraken Robotics than Rich Tech Robotics because Rich Tech Robotics is a startup, but this one actually has good revenue. They did 19 million of revenue, so 19 million of revenue this quarter. But check out what the analysts are expecting: 32 million in 2 quarters. So that growth is interesting. And they're also expected to make net income the next 2 quarters, so stay net income positive. EBITDA is supposed to double, so that's an interesting play, and I can see why they're at all-time highs. Probably wouldn't buy them here though, because there's a lot of stuff that has to go right. But I would much rather buy them than a Rich Tech Robotics. And here's the only thing that scares me around this company. Again, the momentum's been great, so if you own this stock, you're probably up a bunch. So ignore me. But here's why I just couldn't trust like real money in this name, in my opinion. Like if we go to the revenue, the sales, the lifeblood of the company, I mean, it's literally $1 million, and it's down 19% year over year. So the revenue's down 19, and they're losing net income every quarter. They have no IP or patents. It's just hard to trust RR, I think. Sorry. Okay, let's keep going here. Oh yeah, Apple stock. You know, speaking of them, I am on an Apple device right now. Yeah, what a birthday present for me today. Oh, dang, is this your birthday, dude? Yo, it's happy birthday to ZZ Buds. Shout out to him. I hope you're having a great birthday besides your stock portfolio. Hey, but whenever if you're like me, here it's hard to like actually feel this way, but if your intention like me, unless you plan to never buy again, unless you literally plan to never ever buy stocks again, you really shouldn't be too mad about your stocks going down because you can buy high quality stocks at a lower price. Like unless you know what I mean? So that's just me maybe being positive. But here's Apple right here. I'm shocked. They're at an all-time high today. Let me see if there's any news specifically around Apple. Apple iPhone 17 series records 14% sales growth in US. AI division restructured. Okay, anyway, let's go look at their numbers. Apple's an absolute beast of a company. Obviously, they sell smartphones. Their smartphone market share is a 17%. Yeah, iPhone is literally half their sales. So half of all of Apple's revenue comes from the iPhone, but then they have their high margin. This is the most valuable part of Apple is their services business. If you go spend $100 on the App Store, like on Clash of Clans gems or something, $30 of it legit goes back to Apple as a royalty, a developer fee royalty. So that business is now basically $100 billion of annual revenue for them, brings the most of their net income. Then they have the Macs. These are hardware sales, not too high margin selling iPhone and Mac, still good margin, but not as high as the software. But yeah, wearables like AirPods, then the iPad. Here's also why Apple is a big affected by tariffs, because did you know only 36% of Apple's revenue comes from the United States? I always thought it was a little more than that. 26% of all their revenue comes from Europe, 17% just comes from China. So they're in a lot of international markets as well. Like in the US, we don't allow Chinese phones because they're considered spyware, but China actually allows Apple phones in China because Apple phones are so protected, and actually like Apple can't even access your data. But yeah, they print money. Apple legit makes 20 to 30 billion of net income a quarter. And what is Apple doing with basically 20 to 30 billion net income a quarter? Well, they actually spend it all buying back their own stock. I kid you not, if you look at the top here, they spend 20 to 25 billion dollars of net income every quarter solely buying back their own stock. I mean, that's insane because they have a dividend too. The dividend only costs 4 billion. Since they have so much leftover money, they just spend it all on share buybacks. That's why there's so much future growth expected with Apple. And here's what the share buybacks do for you. If you look at the net income is up by 9, but the net income per share is up by 12. Again, the net income growth and the net income per share growth should always be the exact same. The only thing that changes the EPS growth is the share part of the ratio, and the share part of the ratio went down, making the EPS artificially go up, which when the EPS artificially goes up, that makes the PE ratio artificially go down. And so literally, whenever a company does share buybacks, it pretty much gives you more ownership. It forces the stock to go up. Whenever they buy back those shares too, they don't have to pay dividends to those shares. It's just a great thing for the shareholder. What app is this? Yo, it's a Weber. Yeah, hey, by the way, if you want to get this app I'm on, it's actually a brokerage where you buy stocks on. It's in the link tree in my bio, the very first link there. And yeah, lowest fee brokerage out there. It's free. But if you deposit $100 too, we'll both actually get some free stocks. It's an affiliate link too, full disclosure. So let's see. Oh, BME. Did I not get to BME stock? Oh, we already did that one. There's some good ones here. HOG stock. So this is Harley Davidson. Actually, this one isn't great. You know, they just sell motorcycles. They just sell a commodity, and they kind of went woke or something. I heard some people, like my motorcycle guy, he's like, nah, dude, I don't like Harley Davidson anymore. I still don't remember what they did, but it was some sort of political move. But anyway, this is actually unfortunate. Harley Davidson is the same price that it was in 1999. So you bought the stock in 1999. It's the exact same price that it is today. It's rough. Yeah, the net income's choppy. Yikes. The revenue, the sales are down 19% year over year. So motorcycles, I guess, aren't selling too well. And the net income's down 50. Was that real? Yeah, that was real. Yo, I can understand why this stock is the same price that it was in 1997. Yeah, I'd stay away from them, to be honest with you. I mean, it doesn't look like they're going bankrupt, but that's just nasty, terrible, negative growth. Oh, yeah. So ISRG right here. This is a really cool medical device company right here. They make those like chemotherapy, big screener machines, and then they also service them. This is a great growth stock, but the multiple is a little too high, but they're worth looking into. Check this out right here. Yeah, if we go to the PE ratio, which is price to net income, it's a little expensive, 64 times net income, but here's why they definitely deserve it, in my opinion. If we go to their main business, their instruments and accessories, it's super growthy. It's up 18%, after it grew 17, after it grew 21, after it grew 12. So the growth is really nice on that business, and not just, their main business, but also their services revenue, where they service the machines. That's up 24% to a new record. Like, all their businesses are at a record. The expectations are expected. Like EPS, they beat on EPS by a huge margin every quarter. If they're beating like this much on every quarter, they're going to be beating in the future too. And check out this net income. I mean, this is amazing. They're easily making 500 to 700 mil of net income a quarter. At this growth rate, what's it going to be the same time next year? And also, just adding to the cherry on top here, this is an absolute insane balance sheet. You're not going to believe how much interest they make just on their cash. So right now, they have $5.33 billion of cash and no debt. Yeah, look at that balance sheet. No debt also. It's a completely debt-free company with $5 billion of cash, and that cash isn't just sitting there doing nothing. If we go to their interest, so this is the money the interest they're making on their cash pile. They made $88 million of interest on their cash, and that goes straight to the bottom line. It's crazy. So pretty cool. What stock owns number one spot wise in your portfolio? Yo, that would actually be Comfort Systems right here, and it kind of grew to that position. But yeah, it's worth $9,900 here. I'll do a super quick portfolio update for you. But yeah, that's my largest holding by far. My second largest holding would be CEG, Constellation Energy, worth $5,300. And then we also have a Webull portfolio, which, full disclosure, I love being fully transparent. Look at this all time. If you look in the top left, we're only up 22% all time. We're up 0.8% on the day. Buy every day. Check, do AMD. Hey, Money, what up, dude? I do own AMD as well. They're one of my better performers. I wouldn't buy AMD here, but congrats if you own this one, because AMD is pretty much at an all-time high from that OpenAI deal. OpenAI plowing AMD orders, chip orders. So, anywho, let's get back to the update here, or stocks here. So, Sam said URG stock. Let's do URG. What is URG? So, this is UR-Energy. So, I actually haven't heard of this name before. Hasn't done too well. It's the same price that it was in 2021. But let's go check out the numbers here and see what analysts are expecting. Revenue is supposed to fall 50% year over year, so that's not good. That's not good. Sometimes I add stocks to my watch list to like short them. So revenue's 10 mil. They lost 20 mil. What's the market cap? 550 mil. I don't know. I'm actually going to remove them from my watch list. Again, some stocks are out of my watch list just because I potentially want to short them. But yeah, nothing looks good here, to be honest. I mean, the growth is there. Like there were like, that's 2020. Where there's two missing quarters here. What the heck? 2024. There's a missing quarter. I don't know. They had no revenue last quarter. That's what it was. So they didn't make any revenue. I don't know. I'd be so careful with that one. That probably wasn't too helpful. I do apologize there. So, Willie said RGTI. This is basically your quantum momentum play right here. There's no real fundamentals on this stock, or Let's see if there's any news down here. Riggedy secures, oh, look at that. $5.7 million defense order shifts to government focus. That's interesting. For a cloud service with quantum infrastructure installation. Hey, well, that's Riggedy computes significant short volume. Well, what's the short volume? Hold on here. Whoa, the short interest is 15% on this company. So 15% of all the shares are being shorted. Anyway, this is a pure momentum play. If we go to their actual, like, here's why I can't trust this one. I don't know I wouldn't trust this one with a lot of money, but if we go to the revenue, I mean, it's $1 million. I mean, it's 1.8 million. It's down 42% from the previous year. They're losing 20 mil of net income a quarter, but it's tough. I guess there is some growth expected, 2.6 million in 2 quarters, but I don't know. It's pure momentum quantum name with no. I don't like those kind of stocks just because they don't have any money. Like, you're paying for so much future hopium with that stock. But just buy now and trust them. You want to swing trade that one, I think. What about YouTube? Yo, Mr. Ask, what do you mean there? Like, do you mean YouTube stock or I don't know. Yeah, I'm streaming. By the way, I'm streaming on YouTube and TikTok. Yeah. By the way, my YouTube channel is called Nathan Robert. It's also in the link tree. By the way, that's the best way to support me. By the way, I sell nothing. I have no course, book, WhatsApp. I'll never follow you, DM you. Only thing I do have is a YouTube channel. So if your best way to support me is just subscribe to my YouTube channel, watch the stream from YouTube, because TikTok keeps randomly taking down my stuff. But yeah, my YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But yeah, just type in YouTube Nathan Robert. All right. So Guru said TWST stock. I've never heard of this one. Let's check it out. Twist. Oh, it's a bioscience company. Actually, they have a decent market cap, though. A $2 billion market cap, but the stock is done terrible, flat from 6 years ago. Let's see what they do. So next generation sequencing tools. That's good growth. That's really good growth. The revenue's up 28 after it grew 61, after it grew 36. So that revenue's at a record. They also have their synthetic genes. Oh, so some maybe gene splitting company. Well, they actually have real growth. I actually like this one a lot more than like a what's that called? The one that like a Gilead Science or like a CRISPR Therapeutics. This one, out of all three of these, I'm actually going to put them on the watch list just for fun. I probably won't own them, but they probably are one of the better plays out there. Oh yeah, and ARK owns it. So ARK Invest owns it, and she owns CRISPR Therapeutics, so she must have liked this one too. So it looks like some sort of diagnostic and research. They're in the gene therapy, gene splitting. Anyway, yeah, there you go. King said Oracle stock. Let's do Oracle right here. Yeah, Oracle. This is your huge cloud play. They have so much backlog right here. Let's see if we go to. So this is the crazy part. So look at this. This is the Oracle's own projection. Okay. Oracle projects $225 billion of revenue by 2030. So fiscal 2030 revenue of $225 billion for that year. Right now, if you go to their revenue of, it's 15 bill a quarter, we'll round it up to 15 bill. They're doing $60 billion a year currently. And they're expecting, in the year 2030, full year, $225 billion in revenue. That's an absolute growth monster. I would love to see that. That'd be crazy. That's honestly why the stock gapped up so much on earnings day. They had like 300% backlog in their cloud. If you didn't guys know, the US TikTok cloud is now on Oracle, or the data and stuff. They have a dividend too. You get a 0.65% dividend. They raise the dividend every year. Maybe they'll be able to raise it more with this new growth. So Oracle's really growthy. They're opening up like 30 new data centers. I remember when they announced that, they're sent up the whole AI ecosystem. Would you sell some Powell shares right now? If I wasn't me who just diamond hands, probably. But me, nah. Even though I'm up 4.5x on this stock, and it's nearly at an all-time high today, I'm not selling a single share, not even trimming one. Because here's the thing, even though they're at all-time highs, they're only trading at 24 times net income. I mean, that's still fair. I mean, I have no reason to sell out of them. I mean, why? For most people, though, it would make sense to trim or something, but not fully sell out. Because the fundamentals, I still trust them. I still like. Okay, Kevin. Oh, Carnival Cruise Line stock. Oh, then we'll look at HPQ after this. Are you still in InnoData? I am user 8. Yes, sir. So actually, if I go over here to my Roth IRA, I do still have my InnoData shares. Yeah, we're up 129% on this sucker. Pretty cool company. Looks like that's the only stock green in our portfolio. By the way, if anyone, I saw someone ask earlier, what's your newest position? It's actually, it's not new position because I already owned the stock before today in a different portfolio, but it's Calmain. It's a chicken egg stock, and I decided it deserves a couple $100 of my money in the Roth IRA. So yeah, look at them all time. They're up 11,000% all time. I like them though. Okay, so Carter, here's this is an industry I don't love. This is the cruise line industry. Again, would never in a million years expect this to actually outperform the S&P 500. So if you're like, this is a swing short-term trade. Carnival Cruise Line stock is the same stock price that it was in 1998. Again, you're not buying this to keep up with the S&P 500. You're swing trading it for some sort of, a lot of people like to short it whenever there's, or back when there was COVID and I remember the next Delta variant came out and stuff, everyone would short the life out of this. But anyway, yeah. But this, honestly, Carnival Cruise Line is finally, like, if you go to the revenue's up 3, but they're finally making consistent money. Like, this is actually a little impressive. If we go to the net income the past year, if you average it out, they're easily making like 400 to 500 million of net income a quarter. So they were making great net income. But again, if we go back to, 2021, 2022, even after COVID ended, they still lost $2 billion a quarter for years. I mean, and that's unrecoverable. Yeah, I don't love this one. I don't expect it to outperform, but it has done good. And the numbers aren't terrible. Honestly, you want to see an impressive cruise stock that has insane numbers is actually Royal Caribbean. Again, we looked at Carnival Cruise Line, same price that it was in 1997. Well, this one is up 10x it's literally exactly 10x higher than it was in 1997. So, and they make great, like, look at these consistent numbers. There is no, they didn't lose as much. 2022, they got profitable way quicker. And the growth rates on Royal Caribbean are insane. So congrats if you own that one. All right, we'll look at a couple more here. All right. You know what? Yeah, let's just look at InnoData right here, because why not? What up, Tom? Yeah, let's do it. Hey, we just looked at NU stock, Sean. I feel bad because we just looked at that one. If you got another stock you want me to look at though, Sean, let me know. But here's InnoData right here. InnoData, this is one I do own. I wouldn't buy it here at this price, but I put them on the watch list because they're certainly an interesting company. I mean, if you didn't know, 5 of the Magnificent 7 are customers. Amazon's a customer, Microsoft, Google, and Meta, and NVIDIA are all customers. Their largest customers, either Google or Meta. They didn't disclose it, but they told us 5 of the Mag 7 are customers. They're working with specifically their main customers. And look at I'm not buying them for that reason. I'm buying them because they're so growthy and they're amazing numbers. So if you go to their main digital data solutions, they're a data labeling company. They're like just like Scale AI. The revenue is up 99%. After grew 92%. Like, the growth over here is insane. Not just this quarter, but expected as well. They did 58 million of revenue this quarter, a record. It's expected to be 70 million in 2 quarters to EPS. They beat on EPS every quarter. Yeah, not to mention, this is a net income positive company. They're making net income every quarter. They're really growthy. Revenue's up 80% after 65, making net income every quarter, deleveraging the balance sheet. The liabilities used to be 57% of the assets. Now it's only 34%. So I bought the stock because literally every single thing is headed in the right direction. And whoa, why does Title Trust own that? I don't know. Maybe they'll do some ETF. Okay, anyway. Let's see. Should we do that one? Wait a minute here. Have you done Run? I think that's some solar momentum play. I don't think they have any good fundamentals here. So yeah, so we'll look at Sunrun right here. Sunrun, there's good, congrats if you own this one, like on the dip here, but here's why I'd still stay away from this stock. I mean, here's why they're well off their peak up here. What website? This is actually hey, GH, by the way, this is a brokerage I'm on. This is where you buy stocks and stuff. They add, you get a tax form every year. So if you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there where you buy stocks on. It is an affiliate link too, full disclosure. So if you go and deposit $100, we'll both get some free stocks. But yeah, it's a brokerage called Moomoo, link tree in my bio, very first link there. But yeah, here's Sunrun. Here's the thing I'd not buy. I can't trust this one. Sunrun has lost $300 million this quarter, $277 million last quarter, $3.4 billion that quarter, $400 million this quarter, $250 million, all for literally all of eternity. This company just burns money. So it's not getting my seal of approval, but the momentum around solar, and it's not just Sunrun, all those solar momentum names have been momentuming up higher, but this will probably just go back lower eventually, unfortunately. Is Cash App? No, hey, Cash App has a lot of high fees. On actual like buying and selling stocks. This one is zero. This is a free brokerage. The one I'm on right now is zero commission, zero fees at all, no monthly cost or anything. So yeah, if you want to get this one. Also, by the way, so same with like Robinhood and Webull, all these brokerages I'm all using are all like you can buy stocks. Like you can buy stocks on Cash App too. It honestly at the end of the day it'd be fine. But you can buy stocks on any platform. But I like Moomoo specifically because you get the idle APY under cash. Yeah, if you look in the middle of my screen, you get a 3.85% APY under cash, and there's so many cool features like the super investor tracker, like you can see the Nancy Pelosi moves, because they have to make them all public by SEC law. You're about to end the stream here, so I'll go over this too. Another cool thing about this app right here is you can track like all these different ETFs right here. If you want to learn more, find new sectors. And then also there's this interest rate probability tracker down here. That's really cool. You can see what is the next meeting rate cut probability. So there's a 97% chance of a 25 basis point cut in the October meeting, December meeting, and 95% chance of a 25 basis point cut. See the Fed. There's so much to explore on this app right here. Oh yeah, like you can see you can learn about the industry chains and learn like what part of the chain you want to actually invest in. There's the institutional tracker. Like you can see what Berkshire Hathaway's doing in ARK. Anywho. Yeah, hey, again, if you want to get this brokerage I'm on, it's in the link tree in my bio, very first link there. It's a brokerage where you buy stocks on. Again, they send you a tax form and stuff. Okay, what up? We'll look at some more here. Yeah, link tree in bio, very first link there. It is an affiliate link too, full disclosure. So if you go into deposit $100, I'll get some free stocks. So BYND, yeah, BYND. Oh, actually, someone said TR stock. What is TR? Tootsie Roll. No way. Hey. So yeah, Tootsie Roll is publicly traded. I forgot about that. They're actually the highest stock price they've ever been. I think they do like a yearly special dividend, or I don't know. Let me check right here. So a very low dividend, a 0.8% dividend. So nearly 1% dividend yield. Again, I don't know if I love, well, actually the revenue is super low growthy. Like look, revenue's down 2.8 after revenue's up 2.8 after it fell 5.8. So a bit of a slow grower, single digit growth, but they are making net income every quarter. Like that's the good news. They're making basically 20 to 30 mil of net income every quarter. And then I guess, let's go see how much the dividend cost. So they made 17 mil of net income this quarter. The dividend cost exactly, it changes every, 6 million a quarter. The dividend costs 6 million a quarter. Interesting. I don't know. Nothing. I don't expect that to outperform the market. Nothing blowing me away there. What website or apps to use? Yeah. Hey, by the way, all these apps, these are all brokerages right here. All the brokerages I'm using or all these apps I'm using are all in the link tree in my bio. Literally just saw a SoFi commercial on Hulu saying, "Get your money." Hey, what up, Clutch? Good to see you, man. This app I'm on right now is the first link in the link tree in my bio. Okay, let's look at NUR. We'll look at NU stock. This is your crypto bank out of Brazil. Yeah, what up, Sean? So if you're wondering what this company does, we just looked at the stock, so we'll be super quick. Sorry, but 92% of all the revenue just comes from Brazil, which is really where you want to be, because that's where crypto, for transactional purposes, is really popular because the currency isn't good down there. We see the revenue. This is why I love the company. They're super growthy. The revenue's up 28 after it grew 52, and they're making easily 500 to 600 million of net income a quarter. Like great net income numbers. So that's why I love them. Someone says, so no beyond me. Yeah, please, unless you want a momentum swing trade this one. Like don't worry. If you see the stock up 91% on the day, don't worry. You didn't miss out on anything. They're still, if you zoom out, at all-time lows. Here's why I would still, again, unless you want to like do a short-term swing trade, that's fine. But to just trust this one in the long run, like this is probably going back to zero. Going back bankrupt to probably like just legit zero. This is a $1 billion. Well, this is after the 93, basically the doubling today. But before today it was worth 500 million. Now it's worth $1 billion. I heard there was some partnership with like Walmart or I don't know. But basically, here's why it's hard to trust this one. Americans have basically said no to Beyond Meat. If we go to the revenue, okay, the revenue, the lifeblood. Again, their numbers, I'm about to show you the numbers. They're going to look terrible, but that's also why the stock is at all-time lows. So That's why I always look at the numbers, because the numbers explain why a stock is either going up so much like AppLovin and Palantir, or going down so much like Beyond Meat and Lucid. So check this out. For Beyond Meat, the revenues, the sales, the lifeblood of the company, the revenue is down 19% after it fell 9%, after it fell 30%, after it fell 2%. Like, they are on an absolute streak of declining revenue. And not only that, they lose a bunch of net income every quarter. The past year, they've lost over basically 150 million of net income. Again, the whole company's worth 1 billion. So they've lost 15% of the market cap just in the past year. And how are they going to pay off their debt and their liabilities? I mean, if you lose money every quarter, that adds to the liabilities every quarter. And the liabilities have been going up and the assets have been shrinking. Not a company I trust, but unless you want to do some short-term little swing trade. May I know which price to enter Amazon? Hey, actually, if you have the intention like me to just never sell Amazon, it's worth buying even here. I mean, I just bought a share of this one basically 2 days ago at 200, I guess just at $213 a share is where I bought it. So I guess that number, but this is a never sell stock right here. Hey, what up, Legend? Thanks for the gift there. I appreciate that. Hey, let's see. So actually, we'll come back to Amazon. Amazon has a huge stake in IONQ, $100 million stake in IONQ. Amazon is a e-commerce play, book play, subscription play, advertising play, grocery store play, AI play, drone play, satellite play. I mean, it's just everything. Cloud play. They're literally a UPS, an Oracle Cloud, a Walmart, an Instacart all in one. I mean, Amazon prints money. So LAES, yeah. Hey, what up, Legend? Thanks for that gift there. Unfortunately, I don't have too much good news to tell you about this one. It's mainly just a momentum quantum name, because if you go to their current revenue, I mean, this just isn't good. I mean, the revenue for the first, and they report in halves. Is this an American company? No, this isn't even an American company. This is a Switzerland company. That's why they're in half. So first off, this is a company headquartered in Switzerland, which isn't a big deal. But that's why they report it says H1, that's first half of the year. They don't report in quarters, they report in halves. And for the first half of this year, the revenue was 4 million, down 63. So I mean, they've been able to afford it. They've been able to, if you're wondering, how did they just beef up their balance sheet? Because they have no revenue and they're losing net income every quarter. How do their assets just beef up so much? That's because they've been diluting you, which is honestly the smart thing for them to do. They're issuing so many shares right now, issuing shares for cash to beef up their balance sheet, which is smart of them. But it's just a tough one to trust, just because you're paying for so much future hope and so much future business, or I don't know. Hard to trust with a new quantum chip. Wait, was that the news at the top here? Well, let me see. Look at this or that. Oh, yeah, let's see. You're right. Let's check that out, actually. CLSQ unveils its Quantum Shield QS7000 chip will officially launch in mid-November. Hey, then they'll maybe finally have some revenue. Yeah, CLSQ launches Pioneer post-quantum hardware security chip. Cool. Selling more shares too, but that's okay. Yeah, maybe that'll bring some future growth. earnings dropped. Check out news slide on Moomoo. Let's check it out. Triple M right here. News tab. Well, here's the actual, earnings hub. We can check that out. Safety and industrial segment grew 5.4 organically. Transport and electronics increased 2. Consumer showed modest growth. I like how it shows on this app the typical earnings move around this. There's a lot of cool features on here. Let's see here. Their numbers dropped today, so I hope I can get them in here. What quarter was it? So 2025 Q2, and this was, it's going to tell me the quarter, Q3. So yeah, we can't see their numbers yet. So I wish I could give you more thoughts on this company, but it's this quarter right here, and it's not showing. Oh, it's right here. Okay, actually, we do get them. Ha! It hasn't loaded here, but it has loaded here. Here is Q3. So the sales are up 3.5. Again, that's one reason why the stock is up 16%. That's great news. Lifts outlook. So that means they rose guidance and raised its full year guidance. That's great news. So they rose the guidance better than analysts expected. They're making easily, 800 mil to $1 billion of net income a quarter. And the operating profit grew 22%. That's actually some margin expansion right there. Was that showing up in the gross margins? No. But anyway, hey, congrats, Looney. I'm glad, you must be up good on your position. Yeah. Okay. Unboxing said Reddit. Yo, I love Reddit. Hey, what up, Anthony? What's up, man? So Reddit right here, this is a lot of people think Reddit is just a meme stock, but this company has real good numbers. Like if we judge Reddit for their numbers like we would any other company, we just forget the name Reddit. I love this stock. And full disclosure, I own them. Here's why I own them, by the way. And I don't just try to own any just Joe Schmo stock. I try to buy quality ones. And I just check the box for quality for me. Look, like their ARPU, their average revenue per user grew 48% year over year. This quarter specifically was absolutely gangbuster amazing. Like best quarter, like insanely good. But yeah, check this out. The revenue's up 77 after it grew 53 after it grew 23. Like they're on a streak. Like analysts didn't expect this. Analysts expected 425. They reported 500 mil. Like that's a huge beat on revenue, and not just beat on revenue, but they beat by double on their EPS, which is net income. So analysts expected 18 cents. They reported 45. So if we go to the net income, they're making 90 mil in net income this quarter. The FCF, which is free cash flow, is insane, over 100 mil a quarter. Their gross margins are 90%. It takes nothing to run Reddit. They have no debt at all, completely debt-free company, raising their cash pile every quarter, earning interest on their cash. So that's why I love Reddit. In full disclosure, I do own 4 shares of Reddit. I bought this one during the dip back. Yeah, there's my little buy order, but yeah, Reddit's cool. Not just a meme company. Good numbers. Their ARPU, their average revenue per user, is so growing. Someone said, YYAI. What up, world? Good to see you, man. Oh, this donk said, what up, dude? He said, what app is this? Yeah, hey, by the way, if you want to get this app I'm on, or it's actually a brokerage where you buy stocks on, it's in the link tree in my bio, the very first link there. Yeah, it's where you buy stocks on. And full disclosure, it is an affiliate link. So if you go to pause $100, we'll both get some free stocks. Unfortunately, we're not actually going to cover YYAI. We especially don't cover these kind of stocks on here. I hope you don't touch this one. I've never seen this. You ready for this? This whole entire company, the whole company is worth $1.1 million. I mean, I'm sure someone in here could buy the whole company. I'm sure someone in here is worth more than this whole company. That's insane. They're worth $1 million. So they don't even get our attention. We won't cover them, but good luck with that. Someone said Tesla. You know what? I don't love Tesla, unfortunately. So here's the thing. The momentum is great. The momentum's great, but they lost the growth. The growth is gone at Tesla. And well, here's the thing. It has a mind of its own. It has a Elon, but here's if we judge Tesla the way we would any other company, it's not a buy. But it's still done great. Like if you go to their PE ratio, again, the PE ratio is the price to net income. They trade at 260 times net income. Again, it's okay to have a high valuation, high PE, as long as you're high growth. But Tesla isn't growing. It's actually negative growth. Their main business, which is 85 or 87% of all their sales, is their automotive segment. That fell 12% year over year. Last quarter was down 15, then down 5. So their main business is declining. And also their energy business is down 7.5% year over year. So both businesses are on a decline on Tesla. Their margins have collapsed. I mean, basically, this is a story of future hopium. About $200 of its price right now is literally supposed to come from robotaxi networks and robots. Like there's so much future hopium you're paying here. And I just personally can't do it. Can't trust everything has to go perfect here. So yeah. The revenue's down 12. The profits are down by 50. Again, I wouldn't. Yeah, someone said sell puts on Tesla. I wouldn't sell puts on Tesla. It's just one I just don't touch. Just stay away from that. And if someone just buys Tesla shares, like it's not even that, it's hard for this one to double too. Like if we look at the market cap, they're worth $1.5 trillion. If you just buy a share right now, for you to double your money, they have to be worth $3 trillion. I think it's a tough one to trust at this. The risk to reward just doesn't look good. But I'm saying the super unpopular opinion here. I probably lost a lot of viewers. I know Tesla is one of the most popular stocks out there. So for me to bang on it, but I just like to call it as I see it. So someone said SMR. This is the small modular reactor company. Basically, they want to make these small modular reactors. And let's see. I think they just got like their first ever little bit of sales. Like if you go to the revenue down here, yeah, look at that. So basically before these 3 quarters, the revenue was 400,000, but they finally have some revenue now, which is good. What are the future expectations here? So they actually missed on revenue this quarter. Anyway, this is just some momentum-y nuclear play. If I wanted to pick a nuclear play, I'd either pick a Vistra Energy or mainly the best nuclear play out there, I'd pick a Constellation Energy. If you're going to buy one at all-time highs, buy the one with real assets, real revenue, real dividends, real share buybacks, M&A. Constellation Energy actually owns 30% of all the U.S. nuclear reactors, which is pretty cool. By far, largest pure play for nuclear re-energy. SMR basically has no reactors. CFLT. All right, we'll do CFLT. Let's see here. Confluent, a $7.8 billion company, pretty close to all-time lows. Yikes, it's half its IPO price in 2021. That's not even that long ago. Let's see what happened here. So half the revenue is from the US. The revenue's up 20%. So yikes, they're still burning through money. They're losing 70 to 80 million a quarter. That's the rough part, That's nearly 300 million a year of net income losses. So I think that's why, the fact that they're just burning through so much net income. But the growth seemed interesting. And look at the growth expectations. The revenue is supposed to go to 300 mil, but they missed on their net income expectations even after beating on revenue. So the margins fell even more than expected. And that's interesting. ZipRecruiter. Hey, is that a stock right there? Zip. Maybe I can type it in. It's ticker symbol ZIP right here. I didn't even know that. Look at ZipRecruiter. They are a micro cap. This is a $380 million company. So they're worth $380 million. And this is probably why. They lost 10 million to 12 mil, 10 mil. Yeah, so they used to make consistent net income every quarter. Now they're burning through 10 mil of net income a quarter. And when you lose 10 million and you're only worth 380 million, that's significant. That's bad. And the business is just in a major decline. This stock deserves to be at all-time lows. Revenue's down 10% after it fell 27, after it fell 28. Oh my goodness. Yeah, this stock, and look at this terrible balance sheet, way more liabilities than assets, and they can't pay off those liabilities, the liabilities are adding to on every quarter. So I wouldn't touch Zip. I feel bad if you own that one. But what up, Tilabi? Yeah, that's rough, man. What energy stock would you recommend if AI is growing? Yeah, the best energy, the one that can actually benefit the most is literally CEG, Constellation Energy, best one out there. GE Veranova somewhat, because they also are exposed to the PJM auction prices and the ERCOT, and so they're unregulated, which I love. So SoFi stock, yeah, let's do SoFi, and then we'll get off here. Hey. Oh, we got to look at KVYO. We got to get to that one too. Peloton. Hey, maybe we'll get to Peloton. Yo, Sean, we looked at NU right when you said it the first time there, Sean. We just looked at it. So unfortunately, we're not going to look at it again. But yo, if you missed anything, by the way, I'm also streaming on YouTube. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But yeah, you can replay it on there. That's the best way to support me, by the way. Just subscribe to my YouTube channel. Watch the stream from there. It's called Nathan Robert. Just type that into YouTube, or it's also in the link tree in my bio. So, by the way, also, I don't sell anything. I have no course book, WhatsApp. I'll never follow you, DM you, nothing like that. But here's SoFi. Here's why I can really take this one serious. This isn't just propped up on momentum. This is, hey, watch out for that guy in chat there. Hold up. Let me report that guy. And I have a guy. He will for sure get taken off TikTok. Okay. And here's SoFi right here. The reason I love financial services right here is because of love SoFi is because of their financial services growth. This is insane. The revenue's up 105 after it grew 80, after it grew 223, after it grew 80. Like, they are on a streak of growth, which is insane. So that's what, in my opinion, justifies the high multiple on SoFi. And they're also, beating on expectations every quarter. Analysts expected 804 mil. They reported 850. Like, every quarter they beat on revenue. Every quarter they beat on net income. Every quarter they're beating on EBITDA by a wide margin. They expected 84. They reported 125. I mean, that's insane. So, that's why I like SoFi. And I regret every share I've ever sold of SoFi. I am a shareholder. I'm totally biased, but I own them for a reason. I regret every share I've ever sold. Same with Robinhood. Two of my biggest regrets are selling out of great companies that just continue to go higher. So the IXN Tech ETF. So yeah, an ETF is just a basket of stocks. If you don't know yourself, like, hey, what tech stock do I buy? Should I buy Nvidia, Microsoft, Apple, Oracle, Broadcom? Well, you can buy this ETF right here, IXN, and it breaks your money up for you into all these tech stocks individually. Hey, what up, Seuss? Good to see you, friend. Hope you're having a great day. So yeah, basically, if you put $100 in this ETF, $18 of it goes to Nvidia, 15 to Microsoft, 10 to Apple, then Taiwan Semi. Looks like I would happily own a lot of those names right there. It's like a nice alternative to the S&P 500. Yo, try not to spam there, Fugue. Hold on here. All right. One or two more here. SoFi, RNU. What does that mean, Tristan? I don't know, but yeah, SoFi, I love them. All right. DWow said, Jeffrey said TNYA. What is TNYA? And hello from Woodlands. Hey, thank you so much for those roses there. I appreciate that. So TNYA, this is Tenya Therapeutics. Yeah, hey, we don't really cover these kind of stocks. Oh, we'll look at Nebius. Yeah, for sure. Hello. Yeah, we'll look at that one as probably the last one. Thank you so much for those gifts there. So here's Tenaya Therapeutics. We're $303 million. Let's see, do they have any revenue? So yeah, this is a startup. If we go to the revenue, if we just go here, it says no data because they've never sold anything. This is a startup. They've never sold a product or a service. So that's why it says no data. And yikes, they lose 25 mil of net income a quarter. Yeah, that's basically 8% of the market cap they lose every quarter. Yeah, want to touch them. We want to see them finally start to sell a product, but not expecting that anytime soon. So here's actually a really cool thing about Nebius. Did you know this? Hello? Nebius is actually, if we go over here to the super investor portfolio tracker, NVIDIA actually, not Jensen Huang, but the actual stock NVIDIA owns a little bit of Nebius stock. Yeah, hey, maybe we'll try and get to Jeff as well. Uh-oh, did my Wi-Fi just disconnect on me? Oh, okay, there we go. So here's the NVIDIA portfolio. Obviously they own a bunch of, so they own a bunch of CoreWeave, obviously. They own a bunch of APLD, but one of the stocks they own is actually Nebius. Again, just because NVIDIA owns a stock doesn't mean you should always go do your own research on it. When we go do our own research on Nebius, I see some phenomenal things. First off, they just got a huge deal with Microsoft, the second largest company in the world. Nebius signed a $17.5 billion Microsoft deal and revealed strategic stakes in AI companies. Pretty cool. So there's a lot of future growth expectations. Like even before the Microsoft deal, I still like this company. Look at the growth. The revenue went from 14 mil to 100 mil. That's before the Microsoft partnership. And look at the future analyst expectations. It was 100 mil this quarter. They're expecting 260 million in just 2 quarters. So really insane growth on Nebius in the future. How are you seeing on this? What website app is this? Yeah, hey, by the way, this is a brokerage where you buy stocks on. So if you want to get it, it's in the link tree in my bio, the very first link there. It's a brokerage called Moomoo. Full disclosure, it is an affiliate link. So if you go deposit $100, we'll both get some free stocks. By the way, all these are brokerages right here. All these are, you can buy stocks on any app right here. All these are great. But out of all 3 of these brokerages, or out of all the brokerages I've ever seen, this is the free brokerage, no commissions, cost nothing, lowest fee. So yeah, if you want to get this one, link tree in bio, very first link there. And yeah, it has a lot of cool tools like the super investor trackers and stuff. So, all right, we'll look at one more here, or 2 more probably. Someone said, where was this? What up, Chuck? Chuck said JEF stock. So this is, Jefferies. I've heard of them. Yikes. The stock has done bad though. Jefferies stock is the same price that it was in 2004. So you bought the stock in 2004, you're down on your position. But let's see, the dividend, you get a good dividend. Usually the banks do. 2.8% yield. They raise it every year, which is good, faster than inflation. Yeah, investment banking and capital markets. They're also in asset management, asset management, collect a high margin fee. But yeah, they've really underperformed. Well, actually, since 2019, they've actually done very well. But when we scroll to the monthly, they've underperformed. But yeah, their numbers are good. I mean, if we go to the net income, they're still easily making 100 million to 250 million in net income a quarter. So, hey, what's the dividend again? Yeah, 2.8% dividend, safe payout ratio. So yeah, you get like 2.8% of your money back in dividends, hopefully 2 to 3% share buybacks. Or not in share buybacks and stock price appreciation. Do they do share buybacks though? Net income's up 33. Net income per share is up 34. So yeah, they've bought back over 1% of the entire company. So you got a 2.8% yield plus 1% share buybacks, and hopefully you get 3% stock price appreciation, 8% a year. Beyond Meat, why has it gone up so fast? People will say, if you're wondering why is Beyond Meat going up so fast, it's actually because if we go down here to their short interest, I've never seen this, 51% of all the shares are being shorted. So it's like GameStop moment. Literally half the shares that exist. Here's the short volume. Oh my goodness. So 56% of all the shares that exist on Beyond Meat are currently being shorted, and there must be some little short squeeze. Don't worry, you didn't miss out on anything. The stock is up 100%, and you can't even tell it's up 100% when you zoom out. I mean, this stock is pretty like trash, but yeah, hey, they're interesting because right now there's a lot of volatility. You could capture that volatility and do some corner, maybe short-term option. I don't know, but that'll probably die off soon. Hey, Catherine said T-Rex. Sorry. Well, last one here. This is just the company that this is a super interest rate beneficial company. The reason their numbers look so bad right now is because interest rates are so high and people just aren't spending on their houses like they used to. What this company does is, we can actually click on the website right here. They do wood alternative decks. So if you kind of look, it's almost like a plasticky wood looking, that's what they do. So they're really interest rate sensitive. Yeah, wood alternative decking and railings for furniture, all that. So kind of trades with the home builders. So as the rates go lower, this should really do better as people spend more on their houses. They're still making net income every quarter, and they buy back their own shares. So the net income is down by 12.7. Net income's down by 12.7, but net income per share is only down by 11%. So they have bought back some shares. But another cool thing is if we go to the actual interest rate cut probability tracker right here. So as we know, that one's super interest rate sensitive. Well, if we go to the actual Fed dot plot right here, the FOMC, meeting rate cut probabilities, in the October 29th meeting, there's a 96% chance of a 25 basis point cut. And on December 10th, there's a 95% chance of a 50 basis point cut. So there's a huge rate cut path probability. And then in the January meeting, a 57% chance of a 75 basis point cut. So literally in exactly a year from now, rates will be like 2%, or like rates are going much lower. And that also means, like, if you look at the middle of my screen, you see how I get a 3.85% APY on my idle cash. That'll also go down. It follows whatever interest rates do. Just like your money market yields will go down, your high yield savings account rates will go down. So that's actually another kind of bullish thing for the stock market. There's a lot of money on the sidelines in money market funds, probably because the stock market's at such all-time highs. Money will eventually flow from the money markets. People, like investors, seek yield. They don't want to just keep their money earning 1% in the money market. They'll probably go to dividend stocks, like maybe REITs, or I don't know, just stocks in general. All right. Yo, actually, we'll look at Oust too. Yeah, hey, the Fjug said RR. Yeah, we just looked at RR, and RR is trash, some startup. But it's a nice momentum play, but maybe we'll check him out as the last one. But yeah, here's Ouster right here, a $1.8 billion company. This one has real growth, like real good growth on them. Check this out. Again, super small numbers. So yeah, actually, don't worry about it, Fugue. We'll actually look at Rich Tech Robotics. I'll tell you, I don't just like calling companies trash. I'll show you the numbers for yourself and show you why I think that Rich Tech Robotics isn't a good investment. But I'll share with you that one right there. But yeah, check this out. Ouster right here. This growth is good. The revenue's up 29, after grew 39, after grew 90. So they're continuing that growth, and the analysts are expecting the revenue to continue to climb higher. They're expecting 40 million, and every quarter they beat on their revenue, so they'll probably do more than that. And they're beating on their net income losses every quarter. They're barely losing any money. Well, actually, I thought they are losing money. 20 mil a quarter, but the losses are narrowing. So everything here is headed in the right direction, and that's what I think justifies this momentum. Now, here's a stock that I think has unjustifiable momentum, or I don't. If I'm going to buy a momentum name that I see Rich Tech Robotics right here, had this nice big momentum push. Do I want to buy them? Do I think the momentum is going to continue on Rich Tech Robotics? I don't know. And here, if I judge this company the way I would any other company, here's just what I don't like about Rich Tech Robotics. If you look at the revenue, the literal sales, the lifeblood of the company, the revenue is down 18% year over year. And it's $1 million a quarter. I mean, they have $1 million of revenue a quarter, down 18%. I mean, look at that. They had way more revenue 3 years ago. So what have they been doing? They're losing millions a quarter, but luckily the momentum's really been in their favor of the stock. So they've actually been able to fortify their balance sheet by issuing shares. They've diluted you every quarter, 50 mil this quarter. So just issuing shares, but the momentum play. Is there a reason to use Robinhood and Moomoo at the same time, or there's no reason I just use multiple brokerages because there's no burden of having multiple brokerages. I mean, it's literally just an extra little sheet of paper filled out 1099 form at the end of the year that I just mail to the IRS. So there's literally, like, I'm already writing a check. So there's no tax burden, no burden involved having multiple brokerages. So that's why I have basically 4 different portfolios. I got my dividend only account. I have a Roth IRA. I have a taxable account here, and then my other taxable. So I got a lot of portfolios, but it's, psychologically, I like having them. I have a different strategy with each portfolio. So yeah, I just ended the stream. We're no longer going to be looking at any stocks in the chat here. So I'm going to wrap it up with a stock portfolio update. Then I'll get out of here. So yeah, if you want to see every stock that I own, I'll do that real quick. This is known as my Moomoo portfolio, my buy and never sell account. Oh, and before anyone goes, by the way, if you want to hit the follow button, we stream every single day, this exact same time every day, sometimes twice a day. I sell nothing. I have no course, book, WhatsApp. I'll never follow you. I'll never follow you. I'll never DM you. But yeah, this account specifically is called our buy and never sell portfolio, because once I buy a stock in here, I never sell it, or I really try not to. I've sold a few, but for right now, like, if you've been on my channel for like the past 2 years, it pretty much looks the exact same. We also have our Webull portfolio right here. This is our risk on account. Yeah, here's our total percent change, our lifetime open profit and loss. We're only up 22% all time. So I just love being fully transparent. I go to a bunch of other live streams and stuff, and no one's ever really fully transparent with their portfolio, their lifetime returns, what they own, why, and stuff. So here's this right here. We're down on a lot of stocks, but we're also up on some good holdings in here, like AMD, Robinhood. Some of these, my biggest regret ever was selling out of Robinhood, or most of my, like, look right here. I sold 50 shares of Robinhood at $36. You know, it's like 130 today. But yeah, we got Dave, SoFi, Disney, Reddit, Supermicro, Clear Secure. It's like that thing in the airports, those Clear Secure machines, P6, T-Row. Then we're down bad on some stocks as well, like Calmain, Progressive, UI's Path, and Zoom. And then we also have our Webull, or not our Webull, our Robinhood portfolio. This is known as our dividend-only portfolio, where every stock in here pays a dividend. But as you can probably tell, most of these are like dividend growth companies, like Meta, Google. Yeah, they have dividends, but the yields are like 0.3. So you're mainly buying them for the dividend growth and stock price appreciation. The stock price appreciation well makes up for it. And yeah, here's our lifetime, or let's just see here. Our year-to-date, we're up 17% year-to-date in here. Past year, we're up 12%. Here's our total percent change on every single stock in here. Again, this also doesn't include the dividend either, but the dividends are so low. We also have a Roth IRA. A Roth IRA is just a tax-free retirement account. And here are all the stocks that we own in here. The only reason we're green in here is pretty much from Inno data. We're up 130% on that stock and just down on everything else. We started our Roth IRA pretty much exactly a year ago, and our newest position is actually Calmain. We bought this stock yesterday. So anyway, I hope you guys have a great rest of your day. By the way, all these brokerages, if you wanted to get any of these apps to, if you're interested in buying stocks, you can, these are all apps you buy stocks on. So yeah, if you want to get any of these, they're all in the link tree in my bio. Hope you guys have a great rest of your day. They're also affiliate links too. So if you want to get this broker, this is my favorite brokerage, by the way. Out of all 3 of these, I'd get Moomoo, the very first link in the link tree in my bio. 0 fees. You get the APY on your cash. Most useful analysis tools. So yeah, anyway, see you guys later. Have a great rest of your day. We'll be live tomorrow at the same time. And hey, shout out to everyone on the YouTube stream. Y'all are the best. I'm trying to build up my YouTube channel, so thank you to everyone on here. See you, Catherine, Looney, Jacob, Talabi, Unboxing, He Cared, This Dong, and Tommy1. Shout out to